Nothing in commodities is overcrowded at the moment. So really, like in a bull market for commodities, it doesn't really matter what you're long as long as you're long something. I think copper is both a supply and demand story. It's not like other commodities where if the price goes up, you can immediately increase production. The price is fixed for a long time. Quantity is fixed for a long time. Well, gold is about 40% of my portfolio at this point. Look, there's a whole bunch of fiscal and monetary reasons why gold might get to 10,000, and I think that could happen. That's not a price target. I'm not holding on until 10,000.
All right, Jared. Most will know this, but you're the man who came up with the term uranium assholes. Pardon my French here, for which you caught quite a lot of flack from aforementioned a-holes, and you have since been on podcasts explaining yourself and so on. So I'm not going to ask you to explain that because essentially it comes down, as far as I understand it, to you being a sentiment investor, and then when the sentiment in a space that is as small as uranium is that strong, then you're no longer interested in the space. But the uranium thesis has been working. It's kept working for what, 8 years now, I believe, and the fundamental thesis remains as strong as ever. It's even getting stronger every day, you can argue. So, well, I guess why don't you tell me what other trade is overcrowded so I can go and buy some of it.
Nothing in commodities is overcrowded at the moment. It's just getting started. Um, in my newsletter, I turned bullish on Palladium yesterday, and I actually bought Palladium myself this morning. Um, the chart is it's one of the most beautiful bottoms I've ever seen in a chart. Nice big base, head and shoulders bottom, breaking out. And if you think about it, palladium is down a lot from the highs because people are driving EVs, and the thought was that we wouldn't need palladium for catalytic converters anymore. And now I think the EV demand is saturated, and I think demand for hybrids is actually going to go up, which uses a lot of palladium. And the other thing is that in the context of all the precious metals, gold and silver and platinum, like palladium hasn't moved yet, so it's been underperforming. So that's something I'm paying a lot of attention to right now.
Hmm. Just FYI, Jared, I think your microphone might not be well connected because I can hear a lot of echo, and not looking at the microphone should be better. We can keep chatting, but it's fine.
It's just the acoustics in here.
Oh, okay, fine. Yeah, that's fine. We recently moved into a new house, right? So
Yeah.
probably still have to figure it out. Good. No, Palladium. Um, Interesting because I was looking at platinum below when it was below 1,000, and I know that these two sometimes go in tandem. Do you think this time is going to be the same?
Yeah, I think so. And palladium is not very liquid, and it's kind of annoying to trade, and it's hard to size up. But like I said, it's one of the best charts I've ever seen. So I encourage you to pull it up and check it out.
Yeah, I'm looking at it right now, actually, the Palladium chart. Um, so essentially, this is built. Does that make you, if you're bullish on Palladium, are you necessarily bearish on the battery metals, for example? So lithium, nickel, and so on and so forth.
I guess the answer is yes, although I haven't really thought about it. Um, I don't follow lithium at all, really. I mean, it's been years since I've looked at it, so I don't really have an opinion on that.
Hmm. What do you think is the potential here? Because indeed, I'm just pulling up the chart of Palladium versus Platinum. Um, Platinum seems to be, building some momentum here as well. What do you think is the potential here? Is this just a cycle where we go to sort of previous highs that we saw in 2021 of up to 3,000, which would be a 3x, or do you think there's more potential than that?
I don't know. I mean, even if we just go up to previous highs, that's a huge win. I mean, even if we go up half that much, that's a huge win. So
Hmm. What is the I know that supply is very constrained, sort of centralized supply of palladium. There's also I don't think there's palladium only mines out there. What's the supply situation looking like here?
I am not really sure. I mean, most palladium comes from South Africa and Russia. And, I think that if you're, I mean, if you're concerned about palladium supply, like these are, not terribly stable places in the world where you get it. So,
Yeah. But if I mean the supply matter, what's so demand isn't the thing that's attracting you the most to it, or is it the chart?
yeah,
What's the
yeah,
main thing that's attracting you to it?
yeah, it's the demand. Yeah.
Okay. Right. I'm just trying to figure out maybe the supply picture here and see what that's looking like right now. But okay, interesting. So palladium, um, not platinum in that case, because platinum is also used in catalytic converters, right?
That's correct. That's correct. Yeah.
Right. So not, I mean, would you not bullish on platinum at all, or do you throw it in the same basket?
No, I would throw it in the same basket. I would throw it in the same basket.
Okay. Good. Well, what else? I mean, I started off jokingly talking about uranium. I do want to talk to you about uranium and your current take, given again the fundamentals behind the thesis have worked well. So do you have a current take on uranium? Have you looked at it more in depth?
Yeah, I mean, the fundamentals are terrific and they've always been terrific. The genesis of the uranium a-holes comment, which was really funny. But there was, I was sort of plugged into uranium Twitter and I was like, there's uranium newsletters and uranium Twitter accounts, and there's like uranium meme Twitter accounts, and there's this whole subculture of like diehard uranium investors. And I'm like, this is a really small space. I mean, we're only talking about, of all the publicly traded companies, it's like 5 or 10 billion in market cap. And people are like super, super focused on it. And generally what I do as a sentiment investor is, well, one of the things that I do is I look on Twitter and I see where emotions are really ramped up. And there's been a couple of points within the context of a larger bull market in uranium where I've identified that sentiment is getting hot, and then it trades off 20%. But like I said, it's in the context of a larger bull market, so it's come back. So I think sentiment in uranium is pretty neutral right now, which is, I think, constructive. I think it's bullish. Um, so yeah, I mean, I'm not playing it personally, but I think it's got upside.
How do you measure the sentiment in this case? I mean, the stuff that you mentioned, the newsletters, the meme accounts, the podcast, there's many more than I think it was about 2 years ago when you said that. There's many more now than there were before, and I mean, everything's been growing. Yeah, I mean, how do you measure the sentiment here?
Well, it's not quantifiable. Like it's really just qualitative. Like it's just me on Twitter. I look for people taking victory laps. I look for people making fun of people who are not in the trade. Like for example, like Bitcoin back in 2021. Like the Bitcoin investors that we're saying things like have fun staying poor and stuff like that. Like that's usually a sign of hubris and it's usually a sign of the top.
Right. And so right now you're not necessarily seeing that, but again, at the same time, since you said that 2 years ago, uranium has worked. So maybe this is a good point to talk about sentiment analysis overall and how you use it and how what are some examples that, for example, you have looked at it, it was too busy of a space and you went short and made money on it.
Well, here's a good example. I was I was speaking at a conference in French Lick, Indiana. This was back in like 2017. It was at the French Lick Hotel. And I was one of the speakers. There was a soybean analyst at the conference. And at this time, like soybeans are trading at like $6 or something like that. They were like at the all-time lows. And this guy gave the most bearish presentation on soybeans that I have ever seen. He said that soybeans were a multi-decade problem and that they would be in single digits as far as the eye can see, right? So I came home and I bought soybeans. Like, I mean, just it wasn't just what he said, it was the certainty with what he said. He
Hmm.
said with absolute certainty that soybeans are a multi-decade problem. And that's usually when you know that sentiment is just maxed out bearish, you know. So
So did you go and buy like bags of soybeans, stack them in your garage? What did you do?
no, I bought futures. I bought futures, yeah.
A little bit easier, yeah. What do you? I meant to ask you, by the way. I wrote it down. I forgot when we talk about palladium and platinum. What are you doing? What are you buying when you're bullish in those?
Futures.
Just futures, like you don't look for miners or explorers or anything else with more torque.
Well, I mean, there's basically one good um publicly traded palladium miner. It's SBSW.
Hmm.
And the chart on that is like also terrific. So that is another way to play it. You know, I've traded futures my whole career. I just have a familiarity with it. So that's usually what I do.
Hmm. Okay. It's SBSW, isn't that they do platinum too, I believe, right? I mean, it's that's Sibani Stillwater that you're some, so it's
Yep.
okay, good. Yeah. But then so what else are you looking at? I'm trying to look at through some of the stuff that you've recently written about. I think you've also talked about copper. Um and kind of the whole point of this transition talks is what I call this show, if you will, is looking for sort of the next oil. You know, what is the energy transition? Like what's the next? Is it uranium? Is it copper? And I know that you might think that it's copper. So what do you think there?
Um, I think copper is both a supply and demand story. First of all, it takes 20 years to bring a copper mine into production, 20 years. So the supply is relatively fixed and it's going to be fixed for a long time. It's not like other commodities where if the price goes up, you can immediately increase production. The price is fixed for a long time. Quantity is fixed for a long time. Um, I think I think copper used to be a China story, but I think now it's really an India story. Um, I think India is really the next growth spot for copper in terms of copper consumption. And that seems to be the story that the market is going with. So,
So what does that mean for you specifically? Are you thinking this is I mean, is this the next soybeans? Is this the next multi-year run, or how do you look at it?
well, first of all, I mean, from a macro standpoint, commodities are outperforming financial assets, and they will continue to outperform financial assets after, 20 plus years of underperforming.
Hmm.
So really, like in a bull market for commodities, it doesn't really matter what you're long, as long as you're long something. And I think, copper is up 30% or 20% in the last couple of months. So I think it continues to work. Um, yeah.
Do you this intermediate term move that's happening in copper? Are you buying it? Like, because I know that you don't have the rosiest of pictures on the macro front. So are you buying the price momentum that we're seeing in copper? Or do you think it's going to pull back here soon?
No, I am buying it. And I actually, this is one instance where I didn't buy the futures. I bought the stock. I bought FCX.
Hmm.
Uh, Actually, I bought long dated calls on FCX to express that view in copper.
Okay.
So,
Yeah, that's a beautiful language discrepancy here. But when I said, "Are you buying it?" I was mostly like, "Do you trust it?" But you told me what I actually wanted to know, which is, are you actually buying something within copper?
yeah.
I'm just wondering if I should even trust this move in copper right now. Although obviously I am bullish on it. Supply and demand, looking at it over the next decade plus. Just wondering if this is a point to really trust this move, given where the macro is. I mean, how do you look at that? you put the macro within your intermediate term perspective on copper?
Well, when you say the macro, are you saying you're expecting a recession sometime soon and sort of a drop in economic activity, so the price of copper goes down? Is that what you're worried about?
Just an economic, I wouldn't necessarily classify it as a recession, but just an economic slowdown of sorts. Or, I mean, there always could be a black swan event relating to the debt that's mounting up and so on and so forth.
Well, they say that copper has a PhD in economics and it's economically sensitive and all that stuff. But I think it's possible for that correlation to break down. I think it's possible for the economy to slow down and for copper prices to go up. Because of the overseas demand. So I'm not really worried about what's going on in the U.S. economy when it comes to copper.
Well, how do you reconcile that? I mean, the U.S. is important to copper demand.
Say that again.
But just thinking about how do you reconcile, not caring about what's happening in the macro in the U.S. given really the sentiment. I mean, again, you're a sentiment analyst yourself. I mean, you use sentiment analysis to make your trades. If things are not going well with the U.S., then what's the sentiment on copper going to do?
Um, I don't know. The charts, I mean, the charts look good to me. Um, so
Hmm.
I would follow the charts higher.
Okay, so you wouldn't necessarily like your opinion wouldn't change based on who wins the election or anything like that.
No, no.
Hmm. Okay. Um, well, and then at the same time, there's talks of China's last week, this stimulus news, their infrastructure bill. There's always things happening within China, sort of trying to prop up commodity prices, but at the same time, you look at what's happening in Chile, for example, where supply is still struggling and so on and so forth. What do you think what's the solution to that? We're not finding as much copper as we're consuming each year. So what do you think the long-term solution is here?
Um, well, I mean, the long-term solution is to explore for more mines. But like I said, that's a 20-year process.
Hmm.
There's really nothing that we can do in the short term to increase supply. Copper mines are big, they're dirty, they're environmentally destructive. Nobody wants to have them. So it's tough to bring a new copper mine into production.
Hmm. Do you think that M&A or mega mergers, if you want to call them, like what BHP is attempting to do with Anglo, do you think that could be one of the solutions, or somewhat of a wild card for copper bulls?
Well, I can tell you that mergers usually happen on the lows and IPOs usually happen on the highs.
Hmm.
Uh, a good example of that was Glencore. When Glencore went public in 2008, that was the top of the commodity cycle. But the big mergers usually happen on the lows. And I think that's a bullish sign from a sentiment standpoint.
Okay. Um, when would you get more interested in copper explorers though? Because if you think the solution to that problem, to the copper problem, is more exploration, wouldn't that make you think that the sentiment on copper explorers would move higher?
Sure, absolutely. Yeah,
Okay, so
yeah.
what do you do? How do you approach it from the perspective of, for example, I spend most of my time looking into exploration companies that are looking for copper and other metals. That's kind of how I've decided to play this, what you call commodity super cycle. But I mean, you do again, sentiment analysis, technical analysis, and so on and so forth. So how do you look at copper explorers or other exploration companies? Where do you start?
I mean, I don't have any experience trading exploration companies at all. Like I've traded the big miners, but I don't have any experience with the junior stuff whatsoever.
Okay. So that's not something you would touch at all.
It's just not in my knowledge base. Yeah.
Okay. Okay. Well, then, what does your portfolio look like right now in terms of breakdown? Again, we talked about palladium at the beginning. I know you like gold right now. You've been very vocal on that too. What's your portfolio breakdown looking like right now?
Um, Well, gold is about 40% of my portfolio at this point,
Hmm.
with a little bit of silver. Um, between gold and gold miners, I would say it's about 40% of my portfolio. And I would say that I really started adding to it around 1800. Um, after that move down to 1600 in 2022. So I would say I started adding to it around 1800. Um, yeah, I am very bullish on gold. So
Okay, so that's about 40% of your portfolio. That leaves what, 60% to short private equity, or what else do you do with it?
that's a big part of it. Yeah, I have, I have a lot of in terms of stocks, my overall thesis is that US stocks are very overvalued and international stocks are very undervalued. And US has outperformed dramatically over the last 15 years. In terms of valuations, like valuations are very high in the US and very low everywhere else. So what I've done with a lot of my portfolio is I've bought ETFs of foreign stocks, Europe primarily, high dividend payers, value stocks, also in EM, that stand to benefit if you have sort of a reversion in this US outperformance. So I'm actually net short US stocks, but I'm net long the rest of the world.
Okay, what's your? I don't assume that you have the same timelines, those parts of your portfolio. Like, what's your outlook on when you close that short position versus your outlook on when you close the long position on gold?
Well, first of all, let me say about gold that there's a certain class of gold investor that will hold it forever, just like there was with Bitcoin people in 2021. And I think that everything is a trade and everything is meant to be sold at some point. So one thing I'm constantly thinking about with gold is when to sell. And I don't think that's any time in the near future. I think it could be a year from now, 2 years from now, 5 years from now. But gold sentiment is still pretty depressed, even with the metal at the all-time highs. So you're definitely not seeing victory laps on Twitter. You're definitely not seeing gold a-holes. It's very like this is from a sentiment standpoint, this is one of the most bullish setups I've seen. So, there are some gold investors that have been in it for a long time, like me. I've been in it since 2005, but they're excited about higher prices, but I'm not seeing that level of bubbly sentiment that you would expect to see when something's on the all-time highs.
Mm.
So.
What would it take, you think, to create that sentiment? Is that a specific gold price? Is it a duration of the bull market? What is going to create that bubbly sentiment, as you call it?
Well, really, what you would have to see is what you saw in 2011, which was a retail frenzy of buying bars and coins, like physical precious metals. Back in 2010, 2011, you had just a massive frenzy of buying in physical and also the ETFs. Um, and that really disappeared for 13 years, and it's picked up again a little bit, but it's nowhere near what it was like in 2011. So,
Okay. So basically your portfolio here is very heavily weighted towards, again, gold, copper, and all these things. Are you playing energy in any way? Because it almost seems to me like if you're bullish on copper, you should be bullish energy long term as well.
yeah, I should be, but I can't seem to get excited about it. Like basically, 2022, I think it was June of 2022, you had a major sentiment top in energy. Um, in oil prices, and then after the Ukraine invasion, natural gas in Europe, you've had a couple of major sentiment tops in energy, and it takes a while to work off that bullish sentiment. So, I mean, there is going to be a time to buy oil again, but I honestly, I don't think it's this year or maybe not till the end of the year or maybe 2025. So I'm just waiting and watching at this point.
Well, and when I say energy, I don't necessarily only mean oil, because I'm also thinking about, say, natural gas, right? Because it's, I mean, the sentiment is being very depressed over there, pretty much. And there's plenty of memes about it, but on the other side, right? There's people basically bearish on it. They call it the widowmaker and whatnot. Does that not make you bullish natural gas?
I just don't have an opinion on natural gas. I traded it once. I got my ass handed to me, and you cannot be a tourist and trade natural
Mm.
gas. So.
Yeah, I find that to be true in most spaces. Um, have you always invested that way yourself, where it's very like your approach is very top down, which I tried once and I received the same handling as you just mentioned. Um, and that I reversed it. So I do everything bottom up now. So I started at the company level, I start at the asset level. I'm trying to dabble in geology and whatnot. Is that how we've always traded, sort of top down?
Oh yeah, absolutely. Yeah, going all the way back to when I was at Lehman Brothers 20 years ago. Yeah, that's what I do best. So,
Okay. What's that resulted in you? Like, what would you typically do in a year
what do you mean?
in terms of returns, like Kager or something else that you follow?
Um, I in my equities portfolio, it's not super impressive. It's probably about 10 to 14% a year.
Good.
Um, but the futures portion is better.
Mm.
So, um, with ups and downs.
Okay. So basically taking big directional bets, if you will.
Oh yeah.
Okay. So what else are they based on? I mean, sentiment, obviously we've chewed through it a couple of times here, but are you paying attention to like geopolitics right now and what else is happening?
I mean, sure, I'm paying attention to it, but geopolitics in commodities are generally fades. That's been true in oil. It's been true in gold. We traded up to 2060, 2070 in gold at the beginning of the Ukraine invasion, and that was the top for a couple of years. So yeah, I don't trade off of geopolitics.
Okay. Because that's not a way to live a stress-free financial life, I don't assume.
Yeah.
Well, how do you do that? I mean, this is it's your new book. It's an audiobook right now too. You call it No Worries. Um, it seems to me like I would have worries though if I were trading, sort of taking big directional bets, and you have a 40% exposure to gold, as you mentioned. How do you reconcile having those big exposures and then still, as you call that book, live a stress-free financial life?
It's funny. It's taken me a long time to get to this point. When I first started in the business, I was very risk averse, and I could not withstand any volatility. Um,
Hmm.
and I really had to kind of grow into that over time. Um, to be able to take drawdowns, take pain on positions without getting stressed out. If you invest the way I invest, you are going to have big drawdowns eventually, and it's really how you handle them. So yeah, it's taken a while.
Okay. So how do you handle big drawdowns? I mean, taking directional bets that are whatever kind of bets, they're eventually going to result in big drawdowns. How do you handle them?
Um, it's really a matter of conviction. Um, if your conviction is high on a trade, you can withstand a drawdown. If your conviction is low, then you cannot withstand a drawdown. And there are some trades where my conviction is super high, like gold. And, you know, there's, look, back in 2022, I took a 20% drawdown in gold, which was super, super painful. But at the end of it, I actually increased the position,
Hmm.
and, obviously it worked out. So,
Do you typically work with like a risk reward or an expected risk reward ratio where you say, I want to see at least a three bagger potential or five, whatever it might be. Otherwise, I'm not getting in.
Um, well, I have, there's big opportunities and small opportunities. And I don't generally turn up my nose at small opportunities. I still will, make something 3 or 5% of my portfolio. Um, I'm not like, I like doing the big game hunting thing, but I don't do that exclusively. I also have smaller bets. So.
Okay, what do you when you take a bigger bet though, like gold, what kind of upside are you looking for? Like how far should gold run here in order for you to be happy with the return?
Well, I'm already happy. But like look, there's a whole bunch of fiscal and monetary reasons why gold might get to 10,000, and I think that could happen. That's not a price target. I'm not holding on until 10,000. That's what a lot of Bitcoin people did with Bitcoin. They said I'm holding on until 100,000. And ultimately, even if Bitcoin got to 100,000, they wouldn't have sold anyway, because they were just married to the position. So the answer to your question is I don't know. I will sell when sentiment gets really, really high. And we're not close to that happening yet. So I'm comfortable to hold on.
Okay. And then what about copper in that case? Copper is already over $5. Is that the same thing? Like, is it just sentiment and then sell when the sentiment gets too high? You're not necessarily looking
Yep.
for,
Yep.
okay. Yeah. When I looked up your name on YouTube before this interview, I saw a couple of things popping up like the hidden dangers in the global economy, China's meltdown, relatively bearish things. So I'm still trying to understand the bullish view on copper and energy at the same time as having a bearish stance on most of the economy. And we talked about it a little bit just now, but maybe you can talk to me more about the things that make you bearish, because if they're very specific, then it maybe makes sense to be bullish copper while being bearish sort of the economy overall. So what exactly is making you bearish here?
Well, first of all, you have to distinguish between being bearish on the economy and bearish on the stock market, right? And I'm a lot more bearish on the stock market than I am on the economy.
Hmm.
Retail participation in stocks is pretty close to the highs, pretty close to all-time highs. You mentioned before we came on about private equity. I am short private equity. I think private equity is a bubble. I think it is potentially on the scale of what happened in the financial crisis if it unwinds. Um, I think that the private equity names are, massively overvalued here. Um, but at the same time, again, I want to come back to this idea that you need to have an economic expansion in order for commodities to go up. I mean, it's absolutely possible for the opposite to happen. That's what happened in the 1970s. You actually had an economic contraction and commodities went up. It was the ultimate pain trade. And that's kind of what I'm looking for. So,
Okay, so 1970s, you don't think this is more like 1940s or the 2011s or the China run in the 2000s? This is 1970s.
yeah, I would say that. Yeah.
So it's what the 1970s was an energy crisis, commodity induced bull run, basically, mostly due to supply constraints.
No, this is really about what's the best way to put it? It's about debt and deficits, right? And it's about the likelihood that the Federal Reserve will someday have to monetize the debt. And every time the deficit increases, whenever interest expense goes up, we get closer to that day when the Fed might have to monetize debt. And that's really the end game for gold and silver but also pretty much all commodities. So.
What do you mean it's the end game? The Fed monetizing the debt. I can see obviously how it's beneficial for the precious metals or the safe haven assets. How is it beneficial to other commodities?
Well, I mean, basically, it's because it would cause a weaker dollar. It would destroy the currency, and the commodity prices would go up in nominal terms. It's good for all. It's good for all hard assets. So
Okay. Are you you recently moved into into this house, as you said? Is that also part of a portfolio move? Because I mean, housing, real estate, also a hard asset. Is it part of a portfolio move or not?
yep.
Okay. So what else are you looking at when it comes out to hard assets? I don't assume you look at the soft commodities right now, or is that something I mean, do you think food is going to keep getting more expensive too?
Yeah, I mean, I've missed out on that trade.
Hmm.
I missed out on cocoa and orange juice and coffee, but yeah, that's part of it too. So
Okay. Gee, listening to you speak, so the dynamic of what's bearish for the dollar is bullish for gold. Um, that's been the case for a while now. But when you look at what the bond market is doing, can you relate it and have the same conclusion? Because I mean, is the bond market even behaving in the way that you would expect it to behave for that previous statement to be true?
well, I mean, look, the yield curve has been inverted for a super long time, like almost 2 years now. It's the longest period of yield curve inversion that we've had. And twos are trading at 4.8%, close to 5%. The market's pricing in a couple of rate cuts. The really the bond market is going to react viciously to the presidential election, particularly if Trump wins.
Hmm.
If Trump wins, you're going to be pricing in more rate cuts, so the front end is going to come down, and you're going to be pricing in more inflation, so the back end is going to go up. I think if Trump wins, we're going to have the biggest yield curve steepener that's going to happen fast in history. So,
Well, it'd be interesting to see who'd be buying all those bonds though in the first place. Because I mean, if there's no demand, does China want to buy them? Does Japan's? I mean, apparently not. Do you want to keep buying? I don't know. Does it really matter who's president if there's no demand? There's a lot of things I'm thinking about here, Jared. But I know you have to go now. You told me that you didn't have too much time. Maybe we can talk about these things next time. Hopefully, we have better luck next time too when we're chatting here, and maybe we'll also have a little bit more to talk about then. I'll let you drop off now, though, and thanks again for coming on, Jared. I appreciate it. I'll be moving on to the CEO barbecue portion for today's transition talks, though. But first, for disclaimer time, and not only a disclaimer, mostly a warning, actually, that is going to be on your screen. Please pause the screen, read it. I'm serious. I kid around these disclaimers a lot, but the things that I say in them are so true, and you should actually care. And although I am here to make money, there's no secret around that. It is also no secret that here at Resource Talks, we try to be different than other channels by not hating the viewer. What that means specifically is that I would like you to be aware of the fact that although none of these companies that you'll see on here have paid for the production of their interviews, they are still likely seeing this as they're seeing their participation in this video as a chance to do some free marketing, right? So start with that fact, watch it with that, knowing that fact, but also be aware that so typically this channel and other channels who interview CEOs or talk about companies, we typically earn our money by charging for the creation and publication of these of these pieces of content, whatever that might be, interviews or not interviews. Even though most will not be as vocal about it, unfortunately, they might try to just get away with a small disclaimer that you never really see and stuff like that. So, although I don't make buy or sell recommendations because, first of all, I have no idea what I'm doing, but also there's a clear conflict of interest. Many do. So you might see some of these companies that you're going to see in here somewhere as a recommendation. Just be aware of the fact that that might be marketing. Okay, so just be aware of that, watching it. And anytime you're watching any type of company specific, watching or reading or listening to any type of specific company specific content, approach it with a dose of skepticism. Why not, right? And if I may be as bold, I'd even suggest you use your own brain while consuming that type of content. But also, although I try to do a decent amount of research and I don't share the questions up front, there are no questions off the table. Companies get no say in what ends up in the final video. I don't sign any waivers or release forms or anything like that. These things should still be looked at as advertisements and not as research. and least of all is recommendations, as I mentioned. Again, none of us know what we're doing. Otherwise, we wouldn't be making videos or creating content for companies. We'd be investing in them for a living. No guarantees here, besides that there will be forward-looking statements in these conversations that are general and impersonal in nature, by the way, containing hopes for future events that may or may not take place, depending on a lot of things, many factors, stuff that are within and outside of companies' control. Be aware of that as well, and please talk to a professional investment advisor, and please just do more research. I'm serious. I mean, there's official documents that will tell you everything on setterplus.ca. That's a government official website that you can go download these documents, rate them to better understand these companies, and do more research. Again, there's stuff on your screen right now, disclaimers. If you don't enjoy losing money, read them and be careful out there. With all that said, though, I'm not going to keep noodling on it. I'm kicking off the barbecue now with somewhat of a different company here today, a recently restructured company and a renamed one, for which I'll have to travel all the way to the land down under, where I'll be talking to Simon Coyle, the CEO of Velox Energy Materials, a company involved in vanadium, lithium, and even hydrogen. And the company is listed currently as VLX on the TSXV in Canada, where an average of about 80,000 shares trade each day, with a 52-week high of 11 cents and a 52-week low of 3 cents. With a market cap of about 15 million Canadian dollars and about 255 million shares outstanding today, this is a 6-cent stock. Adding the 66.4 million warrants and 22.4 million options leaves us with about 315 million fully diluted shares. And looking at the last financial statement, which is dated December 31, the company had about $2.2 million in current assets at that time, most of which, so call it $2 million to be specific, was in actual cash and cash equivalents. There's no long-term debt. There's only about $200,000 that was registered as current liabilities in the form of mostly account payables, but also a small part of a lease liability. That same statement tells me that Velox spent, on average, over the fiscal 2023, about $90,000 a month on administrative expenses, and that's not counting the share-based compensation. Again, the company got restructured late last year, and it's been going through somewhat of a change recently. So although this is where I typically give you the exploration to administration ratio and stuff like that, it wouldn't make too much sense to do that right now, given that those numbers are likely to look different in the future because, again, of how the company is right now. Of course, I do intend on asking Simon about them further on, but it's still your responsibility to head over to setterplus.ca by the time you're watching this video and look at the company's official filings to better understand their financial situations and get a full picture of the numbers. That all said, the projects that this company is sitting on, there's 3 projects, as I said, vanadium, hydrogen, lithium. And one of them is actually in Canada, which might be where their relationship to the listing comes from or not. Again, something I hope to learn more about when I get to shutting up in a few minutes here. The Canadian project is a lithium project. It's in Quebec, so it's, as you might have guessed, a pegmatite target. A couple of pegmatites were discovered there through historic drilling, emphasis on historic, of course. But they were never assayed for lithium, those pegmatites. So Velox believes that there is potential for Muliella type of mineralization here, basically, that basically means swarms of pegmatites instead of individual veins. But they also expect to do some surface work on it this year and define both lithium and uranium targets. The uranium part, interesting. Again, something I hope we can touch upon later on this project. And although I don't think this will be the focus of the discussion today, I do hope to hear more about Lake Pierre later on. That's the name of the project, by the way, Lake Pierre. What will be a larger part of the conversation today is North Queensland. North Queensland is where the company's vanadium project is, as the name suggests. It's in northeastern Australia. And this is, again, as the name suggests, a vanadium project. It's a big vanadium oxide project with an NI 43101 on it, showing over 206 metric tons of 0.33% of V2O5 across the indicated and inferred categories. And the project is hoped to be mined in an open pit setting, given the relative shallowness of the ore body. This is not only a development story, if you will, though. The project sits on an almost 1,300 square kilometer land, most of which has not yet been looked at properly. It's not yet been drilled, so Velox believes it is prospective for new discoveries and growth of the current resource as well. Of course, something we'll talk more about in this conversation. And then there's Cotai, which is a company that Velox owns. It's a hydrogen company working on figuring out how to store and transport green hydrogen while avoiding stuff like pipelines and expensive infrastructure. And so instead, potentially transporting hydrogen in a steady state in powder form, basically sodium borohydride, I believe it's how you pronounce it. That would be which releases hydrogen by adding. It's a powder that you pour water on it, and it releases hydrogen basically. As you might know, governments love hydrogen though, and they love throwing money at it, and Velox is no exception. Just recently receiving a funding agreement from the ARENA, not Chamat's ARENA, but the Australian Renewable Energy Agency ARENA for a grant of 5 million Aussie dollars, I believe. That will add to a project worth $16.5 million, co-funded by Curtin University and Velox on top of this grant to do a bunch of R&D basically, but with the D part being designing and constructing a pilot test plan to answer the question, can this powder be produced and shipped in commercial quantities? So it is safe to say that there's a lot going on with this company as it is now. And although I might have made it sound like I know what I'm talking about, I don't, and I will need an update. And that actually might be a good starting point here, Simon, because again, bit of a restructuring in the company. You changed the focus, changed the name, and now you've also just added some new team members. So talk to me about that sort of from the top. What's the plan or overall strategy here going forward? And also talk to me like I'm five, like very simply, what are you trying to do here?
Yeah, thanks, Antonio. Look, the company's been rebranded at the back end of 2023, and the mindset behind that was really to reinvigor who we are in terms of Velox. If you go back a step prior to that, the original TSX V company was a company called Curry Rose, which has been bouncing around on the TSX exchange for many years with different projects. It got to a point where Mike Griffiths, who's one of our directors, was the old CEO, reached out to a friend of his in Australia and sort of, said, have you got any projects floating around looking at bringing some new assets into the company, Curry Rose at the time? Hence where the vanadium tenants came from. And those tenements have come from Liontown, which is a major ASX lithium company, and Chalice, which is another major ASX company. And that was through through discussions with Tim Goyder, who's chairman of Liontown and obviously a very well-known Australian mining entrepreneur. And then the vanadium tenements, they needed love, if you wanted to call it, and they needed a home to really see where they can go, take them to the next step. They were then ventured into Curry Rose at the time. We also then went through, this is prior to myself joining, went through the acquisition of the Cotai hydrogen project, which you touched on as well. And there's really synergies that we can see between where vanadium's going and where hydrogen's going into that net zero side of things. Curry Rose as a name didn't resonate with myself and a couple of other board members in terms of where we can take this company forward. Hence why we made the move to Velox. And we made the move to Velox Energy Materials, not Velox Resources or Velox Mining, because we don't want to be another resources company. We are bringing tech, which is the hydrogen project. So for us to be another explorer, just plain explorer, was something, again, different we wanted to do. So setting that up was the start of where I've come on board. So I joined the company in July last year. Previous to that, was running the Pilbara Minerals operation up in the Pilbara, Western Australia, which is a well-known lithium mine. I've moved from hard rock lithium to sedimentary-based vanadium. And I'll get the question asked to me a lot, why have you gone from a really well-known commodity to a commodity which is still at the forefront of where it's going to? And my simple answer is I'm a believer in where vanadium's going, and I'm a believer in the redox flow batteries and the need for them globally in terms of where we need to get to for net zero. That's a little brief about what that is. We then moved into the Velox side of things. We rebranded ourselves in colours and so forth. The next move for us was then to be a dual listed entity onto the ASX, which we are now moving towards that. With the hydrogen ARENA grant you touched on then, we actually went into a media embargo for a period of time from beginning in December 23 until March this year. So we really couldn't do anything. And it's a terminology I've been using is been treading water with one foot and trying to run fast with another foot because we were in a bit of a limbo period. So that's been announced, really starting to get some traction on where we're going as a company. And, the marketing side of things is coming out now to show who we are and what we've got behind us. So that's a bit of a background in terms of who we are and where we've come from anyway.
Yeah, I do hope to touch upon all these things that you mentioned here. I also, though, just to what you now said, I saw that you have a proposed ASX ticker symbol on your April presentation. What's your timeline that you're working with for a listing on the ASX?
So current timeline, we're looking at back like sort of Q3 this calendar year. At the back end of that, so we've started the process already. We've lodged our IPO with the ASX, working through that at the moment. We look at lodging prospectus again, I'd say Q3 as we work through that as well. So we're still a couple of other complications, but shouldn't say complications, but in terms of geological reports and so forth, we're just working through to make sure we got everything lined up before we press the button on submitting that prospectus.
So Q3 this year, and how long are you going to keep the Canadian listing for after that, or do you intend to stay dual listed forever?
We'll stay dual listed for a period of time. We never say ever or ever for anything in my world. You don't know what's going to happen. It could be forever. It may not be. And that's something that we'll be open to. Very happy with the current dual listing and the way that's set up. We've got a pretty good shareholder base in North America as we speak. So, and we'll see where the liquidity goes between the TSX and the ASX.
Does it get expensive though to be dual listed?
In short, yes. Definitely, but being a Canadian incorporated company, we're always going to have a reporting back to Canada. So there's always going to be that top co that's going to have to push that back into Canada unless we ended up re-domiciling ourselves, which we don't look like doing in any time in the future. So whether we're dual listed or not, we're still going to have some expenses back into the Canadian corporation entity anyway.
Right. And in terms of marketing, because you said you have a strong shareholder base in Canada, where are you going to focus your marketing efforts? What kind of shareholders do you want to attract into the story now?
So currently our major shareholders are Australian based, which have come in on the back of the Liontown and Chalice tenements coming into the company. So, I think we got the top 70% of Australian based shareholders. There are seeing some traction recently with some TSX or Canadian-based shareholders coming on board, some brokers, which is good. And if that continues, then we'll keep pushing ourselves across both and market across both of the exchanges.
Where I'm coming from with all these questions here, Simon, is that I'm thinking about, sure, there are synergies, as you mentioned, between the different metals, but I suppose that argument can be made about all the metals because like a lot of the metals work together. But what I'm thinking about is managing all this across different jurisdictions, and not only the listings, but the projects too, and also what I would call different industries, because I count your hydrogen endeavors more as tech than resources. Yeah. But so managing all that sounds like a lot for a company, for any company, let alone it's sort of a sub $20 million junior. So is the plan here to keep managing it the way that it is, divest from other parts of the business and focus on only one, or do you think you can run it all at the same time?
Good question. And 100% correct. It can be a lot of work. Hence why, if you look at each project, they're all at different stages. If you had 3 projects and was sitting at development, yeah, mate, you couldn't do it. I totally agree with you. That's why we picked the portfolio the way we picked it. We got our vanadium project has got a resource that's pushing into study stage with further upside in terms of exploration. The hydrogen project is Velox currently pretty much hands off in terms of what we do with that. It's very much run through the Curtin University and the professors there. Our project partnership in that sense is the commercialization piece, and we really come into our own in year 3 over this next 5-year period, which is of that agreement grant you touched on earlier. So between now and year 3, we've got a light touch on that project. The Curtin University manage it; they manage the funding and everything behind that. So hence why it's not much work there. And in terms of the Quebec lithium, Lake Pierre, you did touch on as well. Again, that's very grassroots. We've done some desktop study. We'll be using consultants to do that work. We won't be doing it ourselves. So in terms of a management piece, it's not that bad, to be honest with you, and pretty comfortable with the way that we've got it set up. But as things do grow, yes, you have to definitely look at what we do with all our different projects, and diversification is definitely key in that sense.
Right. So okay, the focus for management or your internal team right now is going to be the vanadium project then for this year.
100%, mate. Yep. So vanadium's our headline project. That is our number one. That's
Okay.
what we're backing ourselves on. Everything else, I call the hydrogen project the free set of steak knives, if you want to call it, because for the cost of Velox, literally at currently $70,000 per annum for them. That's it for us.
Okay, right. Well, let's talk about the hydrogen project, the vanadium project. I mean, first, then you've just recently got back some results from last year's drilling based on what you saw. Do you do you want to go and drill it again this year? Or do you think you're going to have to do some desktop science first?
So in terms of our Cambridge resource, I believe you're touching on there. So that we
Yeah.
did 10 holes last year, which was diamond, 100 mil diamond core. Couple of reasons behind that. We really want to understand the stratigraphy of the ground and understand what the geology was doing over a core base rather than the air core drilling we'd done previously. That was only giving us the 1 meter intervals, wasn't giving us the full definition. Also, it's given us the ability now to push forward into our met test work, which we've released some phase 1 results on that, which are extremely encouraging. We've seen a 0.33% vanadium in the ground, uplifted through sizing and scrubbing to a 0.9%, which is then giving us a pre-float grade of 0.9%, which is amazing, 3 times uplift in that sense. So in terms of putting more holes in the ground in Cambridge, as we speak, we don't need to. We've got enough material there to push us through for our met test work, to give us a process flow. We know that there's a process flow that's being cracked in the region, if you want to call it, by other companies. So it's something new in the region. If we do further drilling, which we're looking at doing on the back end of a capital raising for the ASX listing, it'll be to further expand our exploration resource or our total global resource in that region.
There's also, I'm glad you mentioned the stratigraphy that you saw there, because there was also some stratigraphic variability to be seen in some of those holes. If I'm not mistaken, what's the implication of that variability, and what do you think that's going to do for future exploration efforts?
Well, for us, so our ground, you touched on as well. We've got a large amount of ground, right? We've got 1,250 square k's of ground. From the rough numbers I've done, we're pretty much drilled or have got drilling in about 15% of that ground, right, across the whole region. And what the diamond core did is really show us the different horizons in the Toolbuck formation. Previously, we thought, oh, we'll mine it as any ore body, you put it in as a bulk and you mine it through like that. Understanding now where the different gang fits amongst the horizon and the layers within that Toolbuck, we can see now that it really makes sense to composite the zones in different formats. So, again, recently in some of our announcements, we're showing that there's an A, B, a C, a D, and an E zone, which is being utilised across that Toolbuck region. And what we're seeing is that the A, B, and C zones composited together are amazing in terms of a metallurgy side of things. D and E, not so much. So we can get a really good uplift in sizing, as I said previously, in the A, B, and C zones, but not so much in the D and E. And why I'm touching on that is that where our Toolbuck formation is, and within that 200 million tonnes, we're looking at probably having half of that 200 million tonnes. And again, this is a disclaimer, don't quote me on that number in the future until we do the exact science behind it. But we're looking at probably, having 80 plus million tonnes within that A, B, C zone. So it gives us a really big uplift in terms of where we're going. And that's only within Cambridge. So we push that out to the south into one of our other tenements, which is called Silver Hills, which we're looking at the assaying in that now. And again, we see that we're probably going to be able to get another 200 to 250 million tonnes there across the full Toolbuck. But again, you cut that in half and we get another 100 million tonnes there, and you add that to our current Cambridge, you got 200 million tonnes in extremely great weathered, friable, oxidized zone that is cheap to mine because it's free dig. You get out the ground really quickly. The processing is amazing because you get an uplift at the front end really quickly before flotation, to then push you in to get a concentrate at the back end, which we're looking at plus 1.8%. So there's a lot of upside in that, just in that one region, and that's probably only then that's leaving us still with another 800 square k's to explore to the north.
Given that the ground is friable, as you mentioned here, something I wanted to ask. Basically, as far as I understand it, what that means is that it's easily crushable rock. Basically, it's softer rock. Did you have any challenges drilling through that, or core loss, or anything else?
No, it was pretty good. I mean, yes, some of the core it comes out in pieces, not intact, if you want to call it, but you can also put it together, right? So we had no loss of core. Drilling was pretty quick, which is great in that sense. And we're only going down 30 meters as well, right? So we're not going down deep. So the full each drill hole's only going down 30 meters.
Right. Okay. There was also overburden depth variability, if I'm not mistaken. I mean, in some cases, there's virtually no. There's like 2 meters of overburden, and then sometimes
Correct.
it's like 20 something meters of that overburden. Is that a thing, or does it happen one sort of going from 2 to 20, and then it stays at 20, or does it vary a lot over the land package?
No, it's actually the opposite way around to that. So the 20 meters is the abnormality in terms of what we're seeing.
Okay.
Again, some benefits here. I'm pumping the tires up of our project, but again, the benefits here is being to the east of that whole region, the Julie Creek Richmond region, is that the Toollabuk is coming out at surface. So our strip ratio is what we're looking at. I'm chasing a sub 1 strip ratio there, and again, that's going to give us the upside in terms of OPEX.
Yeah.
Others around us are looking at 3.5 plus for strip ratio. And then you look at other vanadium mines in Australia, and they're at 7 plus in strip ratio, right? So you're adding a lot of mining cost to yourselves where we haven't got that issue. So the 20 meters you're saying there is in the areas we won't be mining. So we'll take that out of our actual reserve in the final state and be chasing that lower strip ratio areas.
Oh, okay, so on the parts where there's over 20 meters of overburden, or for your neighbors, they would typically have higher strip ratios because of that.
Correct. So it's actually dipping to the west. We're on the very
Okay.
eastern side of that. So as it dips to the west, it's dipping shallow, it's like very shallow to the west.
Hmm.
But that's what we're seeing is where the upside is in terms of what we've got.
All right, so dipping to the west. Has this drilling helped you better understand the structural controls and what's driving mineralization on here to begin with?
It hasn't. I'm going to give you a really yes or no answer, which is a very Aussie Aussie terminology. It's giving us more an understanding of the stratigraphy and how the Toollabuk is formed. Through previous geophysics and radiometric, we understand where the Toollabuk sits, but we didn't understand the thickness of it, and so that's giving us more than anything. It's a sedimentary-based, contiguous, massive basin, right? So structures aren't really playing a part to it. It's more about how the material has been involved over time.
Okay, so yes and no. Yeah, I suppose that's a fair way to describe it.
Yeah, I don't know if it was a yes or no, but that's sort of like a yes. It gave us some insight, but it didn't give us the insight to the structure.
Okay, how deep do you think you have to go to get the insights on the structure?
Well, we don't need to, in all honesty, because we're at surface. So like I said, we're going down to 30 meters, and we're going to the bottom of the sedimentary zones. Below that, you're then going to oil shales.
Hmm.
Right, so this area is predominantly known for oil shales as well, which has got some vanadium hosted in the oils. And
Hmm.
again, that's not part of what we're trying to chase. That really goes against the whole decarbonisation of the globe and where we're trying to head ourselves towards and put ourselves in that sort of green land package. So that's where the structures come in and understanding of what the formation looks like more than anything.
But don't you need to understand the structural controls in order to zone in on the higher grade for future exploration as well as production?
Yeah, so we're actually going to do that through a geophysics program, is what we're
Okay.
looking at doing that and doing that from a different sense. But again, we only want to go down to certain depths. So in terms of whether it's high or low intensity geophysics is what we're now working through. And then that's going to give us a better understanding in terms of the thickness of the A, B, C zones rather than the Ds and Es. But
Okay.
we do have some understanding of that through other satellite imagery, which our consultant geologist has done a great job in terms of that to really map it out for us.
Right. Where I'm coming from with this specifically is because I wrote down that hole 10 from the 2023 drill program. I believe it was hole 10. It didn't return any significant vanadium values. Uh, what's that telling you about the overall geology on the land package? And mostly, is this a grade or mineralization variability risk, or is this a one-off event? Like, how did this happen?
So what that's showing us that is that it's actually Toollabuk has actually gone through the surface and weathered away. So it's not under the ground in that sense, right? So what we're seeing there is that it's poking its head out at surface, but we're not getting that full formation. So we're actually getting the lower areas, not the top bit, which is what we're chasing.
Okay.
And
And
in terms of variability, there is going to be some variability further to the east you go. But if you stay within a certain zone, which we can see, which I said we can see through the radiometrics, which we've done in that region, we understand where it sits. And adding in this geophysical technology, which we're looking at doing, and we don't know if that's actually going to work. That will give us that better understanding in terms of where it's shallow or where it's the thickness at best.
Okay, but so this is a flat lying ore body, if you will, that's kind of
Correct.
dipping out of the surface a little bit to the, what do you say, to the east?
Correct. Yes.
Yeah, to the east, and then the overburden gets thicker to the west, is what you just
Yes,
told
mate.
me. Okay, so I
Yeah.
can imagine. Yeah, good, good. So when you go back to it next time, first of all, when do you want to go back to it next time to drill it?
So we'll go back drilling, like I said, on the back of a next capital raise, which is aligned with the ASX listing. Our current funds, we're utilizing more on our met test work.
Hmm.
We've got 200 million tons sitting there right now, right? We've got enough to kick a development plan into place, which gives us a 20-year mine life of 4 million tons per annum of feed, which will then produce 12,500 tons per annum of vanadium pentoxide, right? Which is a very standard vanadium operation. So we don't need to go and do any more drilling. It's more a desire to do more drilling to give us a diversity into our mine plan. And that's to chase a low strip ratio mine plan, which then really reduces our OPEX at the end of the day. That's why we'll do more drilling. And we'll do that drilling the back end of this year prior to the wet season coming on. So September, October is what we're looking at.
Okay, do you want to then do an updated MRE, or do you think you skip that and go into PE?
I will definitely do an updated MRE, 100%. And then that will then give us a better understanding in terms of where we go to concentrate into the PFS, PE, however you want to look at it. Because the mine plan will be able to, as I touched on there, we can really stretch ourselves and understand where we want to put your starter pits and then evolve from there too. Because we are only chasing that top, 6 to 8 meters of the ore, which is, as I said, that really is where the processing upslip comes from.
How many meters do you want to put into it to better understand it?
So we're looking at about 2,000 meters is what we'll do across so it's not big. Like these holes are at 500 meter spacings. That's how flat lying this ore body is.
Oh, yeah.
So with the 500 meter spacing at 30 meters, it doesn't take much to go and get a really good understanding where we're at.
They're really,
And
yeah, go ahead.
I was going to say we're looking at actually pushing ourselves to the north of our tenements because we got quite a long stretch of tenements which you can see in our presentations. But we had announcements come out recently because we're looking at exploration targets now, which is really giving us a desktop study, if you want to call it, in terms of where the best place is to put holes in the ground to get the best bang for your buck at the end of the day. We're now, by revisiting a few of the holes and some of the assay techniques that have happened historically, we're looking at now pushing ourselves potentially to the south in our Silver Hills region or tenement range, which is south of our Cambridge deposit, which actually gives us closer to a town and closer to Townsville, right? So there's a lot of synergies there and upside that looks like it if we get there. So by doing that, we're going to chase that Tullabuck again, that surface, rather than going to the north, which will potentially be deeper.
I don't assume there's a change in topography as you move south to north, though.
Yeah, so it's just some undulating hills there. It's pretty flat still, right? The whole region's fairly flat.
Yeah.
But
Yeah.
it's more on like a northwest, southeast trajectory.
Okay, sure. And I mean, the deposit's still open in those directions. I mean, you can still keep growing it too.
We could grow Cambridge, but we are restricted in terms of our tenement boundaries to the north and to the east. We wouldn't want to push ourselves to the west any further because, as you touched on with that whole 10, that's where we're starting to see that the vanadium or the Tullabuck actually disperse itself through surface. So it's really opening ourselves up to the other tenement boundaries or areas we've got, I should say.
Okay. Any interest to pick up more ground then and expand that way?
We don't need to.
Okay.
We've got 1,250 square k's. We've got plenty of ground to create. I mean, we could drill to get over 1 billion tons, in all honesty, of resource. Do you need 1 billion tons? Is the question I keep asking myself. Or are we putting holes in the ground and not really spending money in a really value add way? Is another way to put it.
Okay. You've also done, as you mentioned, some met work on it. Did you see anything strange or notable with the limestone and conquanites? And could the presence of these two pose any challenges in respect to processing and recoveries?
You have been doing some good reading. Yeah. So the limestone / calcite is that would be an issue in flotation, and that's what the areas we're working on at the moment. We've got some consultants working on that who are experts in many different processing aspects, so we don't see it being a challenge, but that is the areas where we're looking at to reduce ourselves in terms of where the risk could lie. Saying that, I'm very much aware of process flow sheets that have been already developed by other companies in the region, which has got exactly the same ore body as us, and they're getting really good grades out the back end. So there's no concern in any sense, put it that way.
What does that result in for them? Like higher operating expenses, I assume, but how much how much more expensive is it?
In terms of for the flotation of the
Yes,
calcite,
in terms of processing, yeah.
it's just a different way of floating. So, and the way we're looking at it is that the actual vanadium is in the sub 38 micron. So it's a reverse float we're doing, not a normal float. So our tails is our actual product, if you want to call it in this sense. So it's a density factor. There's no problems, mate. It won't add to any of the additional processing costs, that's for sure.
Okay, sure. I also read, you're right, I did do some reading, although I don't necessarily always know what I'm reading, but when I read something that I don't know what it is, I typically write it down. So I wrote down moly trioxide as well, molybdenum MOO3. Is that
Yep.
something that could be a significant challenge for processing as well?
It won't be a challenge, it'll be an upside to us because it will
Mm.
be a byproduct of the process stream. It will
Okay.
be. So our current focus is vanadium and getting the vanadium concentrate out. Once we've got that established, we'll then come back to the beginning again and look at the titanium is another one which we potentially can push out as well, which we're seeing high levels of that through our current assaying, and there's also the moly as well, which we're looking at seeing that. By doing that, we'll end up then potentially having multiple streams in the process flow, which will give us the byproducts coming out, they're all saleable and there's a market for them there.
Okay. Well, so flat lying ore body, decent grade, close to surface, a lot of it too. Processing is going to work. Why did Lionstown even let go of it?
I beg your pardon?
Why did the previous owner let go of the project? Like, why would it even end up in your hands?
So Liontown and Chalice have both got their own pretty good projects, right? Pretty good's probably very much of an understatement. Like they've got fascinating success stories under both of them. They didn't need the vanadium tenements, if you want to call that. They were more a distraction within their portfolios. They weren't getting the attention that they needed to get. So it was a great idea to put them into this vehicle, and really see where they're going to take off. And we've seen the upside of that. And the vanadium thematic is it's gaining legs week on week at the moment. And where the redox flow batteries are going is, I personally believe it's going to take off in the next 6 to 12 months. And now's the time to really grab it by the horns and run with it. And if we're in the spot to do that, to be honest with you. And like you said, it's a tier 1 ore body. It's in a tier 1 location. Queensland government are so supportive of the vanadium supply chain that they're putting money across Townsville into a new electrification line going from Mount Isa through to Townsville as well. So yeah, it's a great story that we're just at the beginning of, really.
Yeah, you see, in a great spot to do it, in a great spot to sort of profit from that sentiment. But would the idea for you not be to bring it to a PEA stage and find someone to buy it, or do you actually want to develop it yourself?
I've developed a lot of different operations, and I understand the troubles with that, but I also see that the upside in terms of a resource going from where we are now into development is huge.
Hmm.
So our trajectory is into development. Within the region, there are other companies that would make sense at some time in the future for consolidation of some sorts to occur. If you're not aware, and others may not be aware as well, a large Japanese entity called Idemitsu have got an Australian arm. So there's a private company. They've got an Australian subsidiary, if you want to call it. It's called Idemitsu Australia, who are very much heavily into coal mining.
Hmm.
They have recently come out and they've done a joint venture with Sumitomo Electric and another company called Veco for redox flow battery manufacturing in Townsville. And what that does is that opens up a full supply chain from pit all the way through to battery within that whole Queensland region. And where we see it, Idemitsu going and what their visions are in the future, look, happy to be aligned with them, but also happy to push ahead on our own path and see where we end up to.
What do you think that timeline for ending up in a potential partnership would be, or the timeline to developing this? What kind of a timeline are you working with in your own head, if you will?
So our own head is all contingent on environmental approvals. So that's the timeline that we're restricted by. So I was actually working on this with someone else today, to be honest with you. So it's look, 27 is really the breaking ground, is what I call breaking ground year. Where that is in 27, I can't honestly say, but we're aiming for 2027 is where we'll start construction and move into production up there, and that is gets us through PFS over the next 12 to 18 months. But while we're doing that, we're running all of our environmental studies. And then, the early stage of next year to the middle of next year, we'll then put our mining lease application in to then push ourselves forward. And that all aligns with the way that the state government's working.
What Velox, I looked it up, it is the Latin word for sort of fast, swift, or rapid, if you will. Last year's assay results, not so Velox. They were not so rapid. I mean, you drilled in September again, and then they only came, I believe, or between August and September, and then they came in April. How come? And do you think it's good April of this year? Do you think that's going to happen this year again? Because you said you want to start drilling in September. So want assay results in what, April of 2025 or before that?
No, I've got to correct you there. Assay results actually came out at the back end of December, early January.
Okay, so what was it that I saw in April?
That was the MET test work.
Oh, okay, good. Yeah. Okay, fine.
So
So
So apologies to correct you, but but in all, I agree with you. They weren't quick enough. I'm an operations guy, right? So I want everything done yesterday. Is the way that we work. And look, we had a lot of delays within labs across the whole of Australia. Towards sort of the middle to the back end of last year, there was a lot of drilling happening everywhere in different commodities. And that's where we just got stuck. We got stuck in a queue. There's no other way to put that.
okay.
Turnaround time from assaying is usually a 60 to 90-day process in NK from drilling to results. And we weren't far off that. We're probably more down the 120-day, which again wasn't ideal, but it was what it was at the time.
Okay. Thank you for correcting me. You don't have to apologize. I have to apologize for getting it wrong or seeing it wrong. But what it comes down to the timeline here. So September drilling assay results then before the end of the year is what you're hoping.
Correct. Yeah.
Okay.
Which will then push us into MRE for Q1 next year.
Okay, updated. Is that an updated and an upgraded MRE, or do you still indicate it and inferred?
We will put some more holes into Cambridge as well to push that out of fully inferred of the 140 we got inferred, to turn that around so that we got a greater percentage of the indicated. And what that does is it gives us the ability to then push straight into PEA, PFS, rather than go through a scoping study. So I want to skip that step pretty much and just move straight on. But if we can get that into indicated, which will be the Cambridge resource, but the other areas will still sit in an inferred sense for now, while we get a feeling of what's going on, and then we'll move that at a later date when required into a further indicated resource.
All right. How much money is that 3,000 meters gonna cost you up in Queensland?
So we're looking about 1.7. That's all in assaying everything at the moment, and because we're going to do full core, right? So it's 100 mm core, so it's not RC, it's not air core. It is going to be all through the diamond core, if you want to call it, because we get the better stratigraphy across the full toolbar.
And all that money is what, gonna be available through the A6 IPO, you expect?
Correct, mate. Yes.
Okay. Okay. What about what happens with the lithium project? And the main reason why I'm asking is I know it's not a focus, but I'm just trying to get a better idea of the total budget for the company this year, and so it's a good point to talk about the lithium project as well.
Yeah. So lithium, look, that was a very much my heart comes from lithium. I love lithium. I think it's an amazing thing, and I can see that with vanadium coming in as lithium has already taken off. We looked globally for different areas of where we could potentially pick up lithium. We didn't want to go and purchase anything. We wanted to peg our own ground. The geology in this region looks pretty good, right? It looks very similar to some of the Pilbara geology we've seen with the LCTs. We wanted to pick up some ground where there had been pegmatites in historical drilling, rather than just going and getting some really green fields. That was what that was pegged for. You know, we've had some hits in the southern corner of our tenements in previous drilling, which actually was drilling for uranium, funny enough. So you touched on, you said, I think to me off camera before, that uranium wasn't known in that area, but there's actually some resources of uranium around our tenements, right, which has been historically there from the 80s and 90s. So that was the data we're looking at, and we came across these areas of the pegmatites which haven't been assayed for lithium, right? So known pegmatites there, and our upside now is looking at the geology and where the greenstones are there as well, and seeing where we're on the outsides of that and really understanding the structures in that region. We've done a desktop study on that through iOS Geoscience, who are based in Quebec. Great guys, did a really good job for us, and that's where we thought, oh, okay, there is some potential here. And our first phase is going to be boots on ground in any of these, grassroots exploration plays. It's boots on ground, have a really good look, take some samples, and then that'll give us a bit of an understanding in terms of what's going on. We haven't been able to get there yet. Snow was there previous. We're now working through funding in terms of what we do up there, but it's only about $150,000 to $200,000 is what we'll spend up there in this 12-month period. And then from that, we'll then understand whether we look at further investment into that ground. We look at potentially offloading it to others in the region, because there's quite a lot of different players up there as well. But one of the best things, I need to add this in, sorry for the talk, but the area where we picked up this land as we're saying, Lake Pierre, is very close to Havre Saint Pierre, the port of Havre Saint Pierre. And I'm probably not saying that correctly with my French accent on it. But that's already mining hub. So Rio Tinto are already exporting out of that port, right? They've got an aluminite mine up there, which they're doing bulk exporting out of. So it's already set up for mining, and that's 50 km from where our tenements are. There's all weather road is there. Hydropower is there within 30 km of the tenements. We just need to get the rocks right now, right? So everything else is actually set up in a better state than other areas of Quebec where there's larger lithium pegmatites known. So in terms of infrastructure, you need port close to where you are to get your OpEx down, right? So all that comes into play. So that was another one of the regions where we thought, wow, this could be a really fascinating area to with some upside.
I don't think it's possible for Aussies to pronounce anything wrong, because whatever you pronounce, it might not be completely correct, but it's fun to listen to. So I'll count it as correct. Okay, but so
that.
300. So 1.7 on the vanadium. Wait, 1.7 on the vanadium, is that Aussie or Canadian?
I always thought Aussie. I should probably talk Canadian. I'm talking Aussie.
Sure, yeah, no problem. But so call it $2 million between the vanadium, the lithium project. You have for the I'm not talking a lot about the hydrogen project, because I just don't know much about hydrogen. Feel free to give me a quick update on it. But as far as I understand it, you also have you have to spend some money on it within that $16.5 million project that you have announced. Do you have to spend your own money, or is that all grant money that you're going to be spending on it?
So let's just jump back a sec. So the 1.7 you said on the vanadium is just in our drilling, additional drilling. We've also got other funds allocated to environmental studies, met test work, and the commencement of a scoping study to some degree, right? So that 1.7 is in ground, and then we're looking at probably another 800 in terms of other studies going on top of that in this next 12-month period, just to confirm that.
Okay.
In terms of the hydrogen, annually we've got it's $70,000, which is part of our annual fee, which is from a previous grant which we had, which actually goes to the University of New South Wales, funny enough. But part of that 70,000, we actually get 43% of that back through tax R&D through Australian government, right? So it actually equates to roughly 50 around there out of our pocket. And then in terms of the project you touched on there, so that 16.5 million is made up of 5 million from Arena, which is a cash contribution, which is 2.5 years in the first 3 years, and then 2.5 years in the last 2 years. So the first 3 years are very much R&D, laboratory, which is covering off the salaries and so forth for the professors. The back end is the pilot plant design and construction. So, and our payments come in terms of cash of 2.5 comes in year 4 and 5, which is when the pilot plant actually goes into construction. And part of that 2.5, we actually then own that pilot plant from that point onwards, not the Curtin University. And Curtin University are actually then also putting $1 million in out of their own pocket, if you want to call it, as a cash contribution. And I mention this a lot because seeing a university actually contributing a cash component to a project at $1 million from a university really gives us weight and gives the backing that they've got to see where this project is going to go, right? So, and that's an amazing feat in their sense. So in total, that's the 16.5 million. There's some in kind from Velox as well, which is my time and some of the other directors' time, which is, pretty standard in this sense. And there's also a lot of in kind coming from Curtin University, which is use of labs, lawyers and so forth within their internal corporate entity as well.
Okay, so to recap, how much out of your own pocket goes into the hydrogen project this year?
70,000.
70, like 70?
70.
That's it? Okay, not a lot.
That's it. And we get 43% of that back on tax R&D.
Okay.
What about our first payment? Yeah, our first payment is $200,000 in year 3.
Okay. Well, so again, it's not a lot. I was under the impression that it's going to cost a whole lot more.
No.
So in cost benefit analysis, it makes sense to keep running it. Yeah, I guess because that would have been my next point. Like, why not let go of it and then go into the vanadium thing? But I mean, cost benefit kind of answers that question. What are you thinking about G&A? Last year costed you about a million Canadian in G&A, I believe, without the share-based compensation. You think you're running the same G&A or with a new team a little bit more?
No, we run the same. We won't be expanding the team over this next period of time. We're using consultants where we can. We're not a big enough company to bring full-time employees in. We are all very much hands-on, myself and the directors. So yeah, we're more in it for the end game, to be honest with you. So cost reduction is key to us, and spending it in the right areas is what we're really concerned on.
Good. Well, so far, if my calculations here are correct, and I'm rounding up here and there, but you put call it 2 million Aussie dollars between the lithium and the vanadium project is what goes into the ground. Then you're doing some met work and some other stuff on the vanadium project as well. I rounded it up to $1 million for math purposes, and then $1 million again Aussie for G&A. That's 4 million, and then I mean the small cost on the hydrogen project, $4 million budget Aussie total for this year. Does that sound reasonable?
Yeah, for a 12-month period, yeah.
Okay.
That's from our capital raising, right? So if you go, that's from September onwards.
Right. Yeah. Okay. And that, I mean, that 4 million, because that's almost a third of your market cap right now. Doing the IPO, you think you're going to get all that at the IPO, no problem?
Yeah, I don't think we have a problem at all, no.
Okay.
So we're only looking at part of the IPO. We're looking to raise 5 to 7 million into max, and that gives us a 2-year runway. The $1 million you touched on there in terms of the study, that's more than a 12-month period. That's probably more like an 18-month period for that amount of money for our studies. So the main bulk of that funding will go back into the ground to expand the resource and put us into the indicated resource category of Cambridge. And then the lower portions of that will be about the study side of things and obviously Gino as well.
Yeah. Good. Okay. Well, then you're giving me a very good perspective of where you stand right now. I think I understand the plan going forward. I think I've been through most of the questions actually that I wanted to ask. What did you come here hoping to talk about that I'm failing to bring up?
I don't think anything. I think we've covered everything that I wanted to bring up. I think that, vanadium's on its way up, right? There's hasn't been a whole lot of, and now I'm going to start talking again. There hasn't been a whole lot of foresight in terms of where the vanadium market's going, and we found it hard ourselves to actually get some good understanding of that, to be able to broadcast that out. More than the fact that we are believers in terms of what vanadium and the redox flow batteries can do to our grid power storage. But it's starting to come out now. The IEA have released some figures recently, which is showing an increase, to 10 to 20 fold in terms of production over the next 10 to 15 years of vanadium demand, to the point where they're saying by 2040, we need, plus 600,000 tons per annum of pentoxide, which, at 12,500 tons per operation, it's 50 plus new mine sites globally. So that's a significant number, which is now coming out. In terms of the global stationary storage, there's 140 gigawatt hours which is required by 2030 globally. That's across lots of different battery storage, which will be lithium ion or definitely be redox flow vanadium batteries. But you take 15-20% of the market of that in terms of vanadium batteries, and the whole world has not currently got enough resource to get us to where we need to get to. So our projects, as well as others, are going to have to go to keep up with supply. It's just that everyone needs to understand that we need more than just lithium. Right? Lithium is definitely an answer, but it's not the only answer. And that's really the point of difference I'm trying to get out there is, yes, lithium's fantastic in EVs. It's fantastic in our phones. It does the right purpose in certain stationary storage. But vanadium and flow batteries need to come in if we're going to take over the world as we want to, and all governments globally want to get to where they want to get to. You just can't do it with lithium on its own.
Given your focus on that thematic, which I can also appreciate, are you there's other metals too that you need? I mean, it's not only vanadium either. Do you think you're going to expand the company in that direction too, where you go looking to add exposure to those other metals too?
I never say never, to be honest with you. And as I said at the very beginning, we're not creating another resources company. We're creating an energy materials company. And we create materials and we'll bring projects in at the right time and at the right stages of a project to give ourselves value. And then, share appreciation is what that's all about. We're looking more for jurisdictions and in terms of, exceptional ore bodies or the potential to be exceptional ore bodies as well.
Got it. Good. Well, Simon, this has been it's been a good overview. It's been fun. It was very nice meeting you for the first time. Hopefully, I can keep getting updates from you on what you're doing with the vanadium because it is interesting. I don't have any other questions, but thank you so much for investing your time with me. If you want to add anything at the end here, go ahead.
No, look, I appreciate the time, mate, and it's been great to get on and meet yourself as well. And I just really, I'm a passionate person, right? And I'm passionate about where vanadium's going, and I really like our hydrogen story too, because I can see that that's going to be a global changer in the hydrogen storage and transportation in that sense too. So, I really encourage people to jump online, have a look at our website, jump on our socials. We've got lots of information that comes out through that as well to give you more insight in terms of where we're heading. And it's the beginning of the Velox story. This is the time now to really invest and see where we're going to go. And we're only setting ourselves up for an extremely fun ride and an increase in terms of what we can show.
All right, Simon. Well, I'll have I'll have your website linked in the description below, as I always do. I'll let you drop off now, though, because as far as I understand, it's getting late in Australia, and now you've got to go. But thank you, though, for this overview. Again, an unusual story, and hopefully you keep updating me on it over the coming months to see where this goes and what happens with that strategy. But for now, I'll be traveling to Canada to look at a phosphate company that goes by the name of First Phosphate and hear about it from the CEO, John Passalacqua. The company is listed as PHOS, so that'd be PHOS on the CSE in Canada, where an average of about 90,000 shares trade each day, with a 52-week high of 55 cents and a 52-week low of 19 cents. With a market cap of about $15.5 million and about 73 million shares outstanding, today this is a 21-cent stock. There are 17 million warrants, most of which are at around 50 cents. There's also a good chunk at 40 cents, and some are even at $1.25. And there is also about 13.5 million options and RSUs combined, resulting in a total of about 105 million fully diluted shares. About 65% of the company, according to the company itself, is in the hands of management, insiders, high net worth individuals, and institutional funds, of which, by the way, of those shareholders, John here owns about 10 million shares. So on a shares outstanding basis, that'd be about 15% rounded up. And so all that leaves about 35% of the company into public hands. Looking at the latest balance sheet, which is dated November 30, the company had about, call it $1.5 million in current assets, most of which almost $1 million of which, to be specific, was in cash. No long-term debt, of course, but account payables and accrued liabilities did constitute about $500,000 in current liabilities. That same financial statement also tells me that on average, over the last reported 9 months, First Phosphate spent about $300,000 a month on administrative expenses, which is about 3 times as much as the same period last year, whereas an average of about $135,000 was spent on exploration and evaluation. To put it simply, this means that, again, and I'm excluding stuff like share-based payments and stuff like that, and I'm also rounding up. The company spent, call it, $4 million over the last reported 9 months, about 2/3 of which was spent on running the company, keeping the lights on, and then the other third went into the ground in the form of, that'd be geophysics, drilling, metallurgy, and so on. I'll keep saying it, as I always do, but I need you to understand that this is only a snapshot in time. In this case, it was specifically at the end of November of last year. So you're going to have to go to the company's official website, which is going to be linked down below, as well as setterplus.ca to look at the official numbers yourself. Make sure you're getting the full picture here, especially because as it is with all the companies I interview, pretty much all the companies I interview, they're non-revenue generating companies that rely on public financings to keep the lights on. And with First Phosphate specifically, there has been a private placement completed since this report was released. That was an $8.2 million private financing. So again, the numbers as they are right now will be different from what I found on the latest official filings, and it's up to you to figure that out. We always have fun with accounting, but having fun is not what life is about. So instead, we'll talk about salt. First Phosphate is, to my understanding, the only phosphate-focused public company in the world. As of right now, they're focused, as I said, in Canada, southeastern Quebec, to be specific. They have a 1,500 square kilometer land package. But of course, as my wife likes to tell me, size doesn't matter, or well, at least as I like to tell her. But what does matter here is where in Quebec we are here, because this part of Quebec is home to a north side, which is it's a rock, it's a type of rock, it's an intrusive igneous rock that is rather rare in the world, found only in a few places. And also, as far as I'm aware, this is the only place in Canada where this rock also has been proven to host phosphate. So that also means that there's low contents of sulfur, there's no heavy metals in this, so it's making it potentially a good fit for the production of what eventually goes into those LFP batteries, because it's called a clean phosphate, if you will. There is also an open pit constrained NI 43-101 mineral resource estimate on this property, showing a $511 million MPV5. That's an after-tax number, and also an after-tax internal rate of return of 17.2%, all happening after a $550 million pre-production capital expenditure and a $130 million sustaining capital expenditure, resulting in a payback period of, call it 5 years. That's 4.9 years to be specific. And there's also an LOM of 14.2 years, during which operating costs are expected to be around $30 per ton of processed plant feed on average. There are a couple of other things to talk about here, to be mentioned, but I'm sure that John and I will get to that later on in the conversation. And actually, this might be a good point for me to shut up, John, and get over and give it over to you, because phosphate is nothing new, right? I mean, LFP batteries have been around for a while now. Even I owned a car that had one. I didn't have a great experience with it, by the way, but that's a different topic. But that aside, LFP batteries have been around for a while. Phosphate's been around for a while. And so if now is the time for phosphate, or if they've been building up to a point where now it's getting really interesting, why aren't there any other public companies in the space?
Yeah, so thanks to start off, Antonio, for having me on, and I really appreciate all the detailed background research that you've done. Especially everything was very accurate in your discussion on share counts and all that. On administration fees, I just wanted to mention we went public in February of last year. So what you've seen there on those November statements were a lot of the costs associated with going public, but we've got that well under control now. We're running at about $50,000 a month in administration fees, and 95% of what we're spending is going into the ground. We just did a 25,000 meter drill program to uncover our second area, which is the Bégin-La-Marche area. So we'll get a little bit more into that, but I guess I want to get back to your main question, which was, why aren't there any other phosphate companies out there? There are phosphate companies in the world, but they all seem to be focused around fertilizer. So you have to remember that 90% of phosphate is and will probably always be fertilizer, right? Based. So in order to make phosphoric acid, the first level of phosphoric acid is called merchant grade phosphoric acid. That's the first purification, and that goes into fertilizer. Now, to go to a second purification, purified phosphoric acid, which is the real clean battery grade, you have to first go to MGA. So all the companies that are in phosphate are really in it for fertilizer. And then there's just a few, very, very, very small few that can actually make the purified phosphoric acid. And traditionally, the purified phosphoric acid was being made for industry. It was going into things like Coca-Cola, toothpaste, was going into fire retardants, sometimes paints as a paint sheen, and a number of other industries. But now it's the LFP category that's really opening up that category. It's going to make it such that that category of PPA, purified phosphoric acid, needs to grow by 2 or 3 times. So that's why there's nobody in that market. Purified phosphoric acid was really seen as a very small niche market on top of a fertilizer market. So most of the companies that are into purified phosphoric acid, of which there are only 4 or 5 in the Western world, 95% of their sales or their revenues come from other product streams, which is mostly fertilizer. So we're the first company that has looked at that niche and said, wow, this niche here of this 5% of the phosphate world is going to be massive. It needs a special requirement because it's going towards technology. You can't just make it off the back of a fertilizer truck. You really need to be integrated and understanding of the downstream technology client. And you also need a very pure rock to do it. So what happens in the fertilizer world is they're purifying a lot of very non-pure rock, most of the time sedimentary rock, and only a certain small portion of that sedimentary rock can make it up to purified phosphoric acid. The rest of it stays back in a waste stream, which you might want to call the MGA, or you might want to call it the fertilizer grade, right? Because you can throw just about anything onto a field, and you don't have the same issues that you do in high purity. So what we've done is in this very special rock, which is the highest purity rock that you'll find on the planet, phosphate rock. It's igneous hard rock, north of site in Quebec. When you take that rock and you beneficiate it, about 90 to 95% of it can be converted directly into purified phosphoric acid, given its purity. So you can then basically become a player just in the purified phosphoric acid market, as opposed to having to be a player in fertilizer and in purified phosphoric acid. So it allows us to really basically invent a niche, or to really break open a niche that was already there and was maybe not fully appreciated.
The acid that you have is also interesting to me because that's something I was wondering about. I often see comparable acids from a number perspective. They're not from a numbers perspective. They're not phosphate acids. They can be manganese or graphite or titanium or something along those lines within the realm of less known anions, if you will. And they have they're relatively big, like the concentration of the ore deposit is relatively big at one spot, basically. So they have a high MPV. They're complex and mostly expensive to develop too. And that then hurts their market caps to levels that are typically just fractions of the project's net present value, as it is with you. And then oftentimes managements don't quite know how to deal with those situations because, granted, they're not easy situations. And but so, what about you? What do you do with a $500 million asset that requires over $500 million in capex at a $15 million market cap? And I suppose more importantly, how would I make money on this if I were to become a shareholder?
Exactly. So, what you're referring to is our Lac de l'Orignal property. The Lac de l'Orignal property has the PEA done on it. We looked at those results, and those results are very good by standards of industrial minerals, which, as you note, is very different than a gold or a precious metal. However, we continued to drill. The Lac de l'Orignal property is found at about 140 kilometers from port, but we found another property just at 70 kilometers from port, Bégin-la-Marche, where the grade seems to be almost double, and in some cases triple what it is at Lac de l'Orignal. And it's also outside of the snow belt. It's sitting right in the valley. It's sitting right near workforce. And we have very strong, basically, support from the indigenous group and also from the local municipalities. So that is the property that we have now decided to focus on. We did 25,000 meters of drilling. We're just in the process of compiling some of those results. I mean, some of the results that we're finding on there are about as high as, if not higher than, some of the mines that are in Russia that are producing on igneous rock. There's very few mines in the world producing on igneous rock. So it looks like it's close to a world-class type of grade. Right now we got to go through the mineral resource process and the PEA process, which will be by the end of third or fourth quarter of this year. So we think that will be a significant value driver because we believe that will be very, very incremental to what we had at Lac de l'Orignal. And the reason behind that is that obviously, when you're looking at phosphate, it trades for about $300 to $500 per ton. So you have to move a lot of it in order to make up your value. So you have to be close to infrastructure. If you're too far away from infrastructure, it doesn't work. But the other really interesting thing is here, we cannot really be compared to fertilizer, to phosphate as one would in the fertilizer world, because we're taking this to make it into purified phosphoric acid, where there's going to be a massive need. There's going to be a major lynch point there. If you go onto our website, onto the main page, there's a beautiful article there from Battery Materials that explains this. So you're going to see a run in purified phosphoric acid, we believe, and similar to the run that you've had in lithium, but it'll be sustaining because it's very difficult to bring new projects online. And the projects that are already online, most of them are already producing purified phosphoric acid to the maximum that they can because they're in sedimentary deposit. So here we get the opportunity to really bring in a massive amount of purified phosphoric acid and produce just for that. And that's where there's really going to be a really big divergence between the price of fertilizer grade phosphoric acid and battery grade phosphoric acid. So it's a little bit of a new model. It takes a little bit of time to wrap your head around it. But that's where it is. It's really in the second transformation, taking that phosphate, making it into purified phosphoric acid, and then making it into LFP cathode active material. And for that, you need to be 100% focused on it, which we are.
But how's all that going to help with CapEx? Because that's what I was referring to, sort of small companies holding big projects. Because if you find more of it, it's also going to increase your CapEx. And it's kind of creating a bottleneck or a chicken or the egg type of situation for us. So how do you solve that?
Yeah, so I mean, we are. There's other projects that we know of just north of us that are, sort of assuming 5 times the amount of production. We're going to be producing just enough for one purified phosphoric acid plant. So our capex is going to be lower. Probably at Beijing-La-Marche will be in the $300 to $400 million range for bringing the mine into production. That's very normal. That's very on the low end for any mine nowadays. It's open pit. It's in the right area. It's also right in the area where you have all the workforce. And then that should be enough phosphate to run one purified phosphoric acid plant. And that's where the real bonus is. To make a purified phosphoric acid plant, it's about $250 million. And that would make enough LFP cathode active material for 250,000 tons of LFP cathode active material, which is about, I believe, 125 gigawatt hours. So when you look at that, and if you take LFP cathode active material at $10 a ton, $10,000 per ton, and you multiply that by 250,000 tons per annum, you see that the math goes up massively very quickly.
But what's the 550 million about then that I saw in your in the outlining of your PEA?
The PEA was at Lac L'Orignal, so we're now focused on Beijing-La-Marche. The 550 that you saw was in Canadian dollars, and that was for putting the mine into production. That's 550 Canadian, which is about 400 million USD. So we feel that the mine at Beijing-La-Marche should be around a 300 to 400 million USD amounts to get into production.
So kind of the same size then?
Same size, but higher grade. So we think it should maybe be a little bit lower, but obviously I can't speak too much about that until we have our PEA put together.
Right. Well, let's talk about that drilling that you mentioned here. You did a little over 25,000 meters, just completed them at the end of last month. And about 60% of the assays have already come back with, more expected shortly as far as I understand it. But so these results that are high grade, as you mentioned, no need arguing that. What about thickness variability here? And it might not be a thing against the first kind of phosphate company that I'm looking into is the first time. But I mean, sometimes intercepts are like 4 meters wide, and other times they're 84 meters. Again, if this was gold, it would be an eyebrow raiser. What about what's happening here with you? Can that be a challenge?
Our strike zone is about 6 kilometers long by about 500 meters, so half a kilometer. The magnetic trend is about 3 kilometers long. I mean, we've drilled the whole thing at about 100-meter intervals. The phosphate is everywhere. Phosphate is like it's almost like a gravel. When you find it, it's there. You need to find it on surface. So it's there. It's a massive body. Now it's just a matter of calculating how much is there, doing the mineral resource estimate, and then moving into the PEA. I mean, we've been hitting from surface, down 100, 150 meters, sometimes up to 12% phosphate. The lowest grade seems to be at around 5-6%, and the highest seems to be at about 15. Like those are extremely high percentages. I mean, if you look at the one mine that's running in Finland, they're producing at 4%. There's a couple mines in Russia at an average of about 10%. So this is quite substantial, and being so close to major infrastructure, and it's a big strike.
So because of the grade, basically, because of how high the grade is, grade and thickness consistency is not something that worries you right now.
Well, I mean, our last couple results were 12% over 100 meters, right?
Mm.
And that goes wide. It could go wide up to 100 meters, 200 meters, up to 500 meters. We won't really know that until we've got the PEA all figured out and modeled out. But I mean, it is substantial. We're very happy with the results.
What's the explanation? And why I'm asking you this is because you have, again, zones of a very good thickness, as you mentioned, as well as very good grades. And I'm just thinking, what's the explanation sort of geologically? Like, what are the controls driving these sort of pockets of high grade mineralization, and how easy are they to understand when prepping for a PEA or looking to get into production?
And so we have, obviously our geologists looking at it. We also have the UCAC, University of Quebec at Chicoutimi, looking at it, Queen's University in Kingston looking at it. I mean, we have some of the foremost people in the world that are very excited about this find. It is probably one of the most important finds in Quebec in the most recent years. It is definitely the highest grade find of phosphate over the last 30 to 40 years, in my opinion. But we're doing a full analysis of it. There seems to be three major zones. There's the what we call the Phosphate Mountain Zone, which is a zone in the north that just seems to be like an intrusion that came up from the lava and is just sitting there. Then south of that, it blends into another very high grade zone. And then we have a very long southern zone where the grade drops off a bit, but it's got, like you said, very, very long, very large consistency and over very large kilometers.
Are those similar structural controls? Like, what's control? Is the mineralization controlled in the same way for each one of those zones?
Yeah, from what we're finding, I mean, it's all sitting within an anorthosite. It seems to be sitting within pretty much the same rock type. But again, we have to do further analyses to understand all of this. It's still very early.
Is that something you're focusing on then this year in 2024?
Yes, that's all part of the mineral resource estimate and the PEA. And we're also doing some advanced studies with the universities, because as you know, when you're in mining, right, that's the thing that kills you, is when there's shifts in rock types and you're not sure what's down there. So we really want to make sure we got this sized up properly, perfectly 3D modeled, and just see all the different grades and all the different rock types, if there are any, and to understand it. But it seems quite consistent.
Okay. How many meters do you think you're going to have to put into this before going into PEA?
Oh, we're ready to go into PEA now. 25,000 meters has drilled up the whole strike zone across the 6 kilometers by about 500 meters wide. We're ready to go into PEA. I don't know what's going to come out as inferred or indicated, but they're working on that right now.
Right. Okay. And then you said you're targeting this by, let's call it basically the end of this year. 2024 is when you want to have.
I would say Q4, yeah, end of Q4 to be sure. I mean, the engineers and everybody has been contracted. The company A&E Engineering that's doing the PEA did the PEA at Lac L'Orignal, so they're very well versed now. It's sort of a rinse and repeat for us. So we're very down the road, and we should have some very significant results, quantification of all of this by Q4 of this year.
Okay. In terms of strip ratio with the other PEA and the other project that you have, that was not an issue. I wrote it down, but based on what you're telling me, I don't assume it's going to be an issue here as well, right?
Again, I mean, outside of a PEA, we just don't know. But I mean, intuitively, I mean, we're looking at it. We found it on surface. It goes down no deep. Well, it goes down past 200 to 300 meters, but we've only drilled to about 200 to 300 meters. So we're into an open pit coming at surface. So you would assume that it would be a healthy strip ratio. But again, until we get this 3D modeled and everything, I'm a little bit hesitant to put out anything on that.
Right. But I mean, you've probably looked at it. No, fine. I mean, it's fine. We'll wait for the.
It looks good. It looks good, but you got to wait for the PEA, right? Even regulatorily wise, we're not able to really speak outside of a PEA. So we're very happy with it. It looks good. Mineralization is from surface all the way down. Some areas of very high grade mineralization from surface where the open pit could be started. But again, until we get to the engineers putting together a mineral resource estimate and a PEA, we need to be cautious about what we say.
Is topography comparable to your other project?
Yeah, well, I mean, the nice thing about Lac L'Orignal, which was the other project, it was sort of like a bit of a mound, like a bit of a baseball mound. So that's really good, obviously, for open pit operation. The northern area, what we call the Phosphate Mountain, seems to be a little bit of a phosphate mound. And then in the northern zone, it's also elevated, but less so, and then it sort of tapers off into the south. So it seems to be, all pretty much on surface and pretty much in, decently exploitable areas. But again, until we do the PEA and get the modeling done, we won't know exactly.
Okay, fair point. Metallurgy, when are you doing? You're doing more metallurgy before the PEA, or do you have everything you need now?
Yeah, so again, the rock type in that area of Quebec is very similar. The metallurgy that we've done on Lac L'Orignal, we would just repeat on Beijing-Lamarche. We feel it would be, pretty much identical. We've already done a lot of sampling on Beijing-Lamarche. If you go to our website and you go to our assets and you click on phosphate concentrate pilot plant, the phosphate concentrate that was used in that pilot plant was from the Beijing-Lamarche area. And then we use that concentrate to make purified phosphoric acid with our partner Prayon. And that was also done with the Beijing-Lamarche product. So, I mean, it's all there. It's all done. We're able to get from raw ore to phosphate concentrate to purified phosphoric acid with Beijing-Lamarche stock. So that's a very, very important point.
Good. Okay. Yeah, well, that puts me through basically understanding what that PEA is going to look like. What about permitting? I mean, open pit mines are not the easiest thing to permit. That not the most welcome thing in North America. I know Quebec is kind of different these days, but how do you expect permitting will go?
No, I mean we're very happy with the way it's going. I mean, we started very early, sort of in an innovative fashion. We sort of see mining as different forever. You've got to have local support. You've got to keep people informed, and you have to consult early. So we consulted with local populations and indigenous groups even before we started drilling. We've got great support. We just signed our cooperation agreement with the local indigenous group. That was a very, very significant milestone. We're working very closely with the municipalities. We've been given major project status by the CMAX, which is the Committee of Maximization of Economic Development for all of the Saguenay-Lac-Saint-Jean area. We have, very open relationships with the municipalities. We consult with them often, with the politicians, with the residents as well. So you never know how that goes, but it's going very, very well. We're quite happy that you see this area of Quebec had a large forestry industry that's sort of now, tapering away, and they're looking for new industry. And the battery industry is something that's very well promoted in Quebec, and especially in this area. This area of Quebec also is doing a lot of wind farms, and a lot of those wind farms are going to need to store their energy on batteries. And as you know, LFP battery is the way to store electricity nowadays. So, I mean, there's a great sort of mesh and a great sort of continuity and sort of placing the Saguenay-Lac-Saint-Jean as the LFP battery valley of North America. And so, we're very well supported. I mean, I'm on local radio almost once every month, twice a month sometimes, and we talk directly to the people. And so far, it's going well. You never know how it goes, but we're also into a smaller mine. When you're making LFP cathode active material, because this material is so pure, we don't have to go through a lot of sedimentary deposit to get to a little bit of purified phosphoric acid. So our mine size can be about 8 to 10 times smaller, and we could produce the same amount of purified phosphoric acid. And we don't need to have a whole component that goes into fertilizer. So we're really focused on making purified phosphoric acid for the battery. So that keeps everything, down to a very reasonable size on the capex size, on the side also of, the local disturbances, the local trucking, the size of the mine. And quite frankly, there's already a mine not too far from where we are at Neobec, one of the only niobium mines in North America, about 10 kilometers down. And people just love it because they get to work there and go home in the evening. It's not like traveling up to James Bay, staying away from your family for months on end, and then coming back. People just love the fact that there's going to be good work, good primary industry, but also secondary industry, right, which is the purified phosphoric acid and hopefully the LFP cathode active material segment to it as well. Good paying jobs. The region there of Quebec has had a problem of, they say a busload of kids leaves the region every week. We want those buses to start making a U-turn and start coming back and even bringing back the kids that are gone. So there's quite a will to get this done. Obviously, in that area, it's a very beautiful area. It's a great live, work, play kind of area. So you have to be really careful on, the way development is being done, which is the same everywhere in the world nowadays, pretty much. But it's a great industrial area. I mean, Rio Tinto is in there, and they've been in there for 100 years with the aluminum industry. 85% of the world's aluminum that was going into fighter jets in World War II was coming out of there. So and now it all goes into cars and such. So there's great logistics from that area of the world down to Detroit, Windsor corridor, and the people are used to industry, and so it's a great addition to the community there.
But essentially, I just want to touch upon something you just said there. There's going to be one end product that you sell. So you're going to have one circuit and one end product. Or
so the way it goes is from the mine, you take the ore out of the ground and it's beneficiated and you create what's called a phosphate rock concentrate apatite. Okay. Then that apatite goes into a secondary facility, which is the purified phosphoric acid facility, where that is it's mixed with sulfuric acid, and then the output of that is purified phosphoric acid and gypsum. Gypsum can be recycled into construction materials, and we've already have a partnership in place for that. And the purified phosphoric acid then gets mixed with the iron and with the lithium to make LFP cathode active material. So at the mine, we would be making the apatite. Then the apatite would be shipped to the port, most likely, where we would make the purified phosphoric acid. And from there, you can make the LFP cathode active material by importing iron and lithium.
Okay. So what I was asking here is basically that, I mean, yeah, again, just one circuit, like you would have with a copper mine or a silver mine that also got zinc in it, and then you do two circuits, a zinc and a silver one. With you, it's really just the one circuit.
Well, it's actually it's interesting, and if you look again on our video on the concentrate pilot plant, so what the raw ore contains three things. It contains the apatite, it contains ilmenite, which is obviously titanium, and it contains magnetite, which is iron. So in order to get to the apatite, we have to pull out the magnetite and we have to pull out the ilmenite. So we do that through low intensity magnetics, then high intensity magnetics. We pull all that out. That also is a secondary product that can be sold on the market. It's about 20% of our mining revenues. And then the other 80% is the apatite.
Okay. Yeah, fine. That's clear. I'm trying to sort of throw things at you about things that could go wrong with this project. And what do you think is the main thing? Like, I guess not worries you, but needs working on. Like, what's the main unanswered question here for you, if you will?
Well, to be upfront with you, I think I'm very happy. I tell everybody I'm a perfectionist by nature, and I'm really happy with the way things are going in the company. The only things that can throw off all of these projects, as you know, is obviously is capital, right? Capital and capex, and just the ability to get it done. So obviously, strategic partners are important to us. Government support is important to us. We already have a letter of interest from the Exim Bank, Export-Import Bank of the United States, for $170 million in financing. Once we are at permitting, we have a letter of interest from the Quebec government, and we have a number of other parties that are, looking at this very closely. So that's the only thing I think that it is in the way of us in success is really, getting there and getting financed and, prudent business decisions, which is what I'm here to make sure happens.
But I also assume, listening to you speak again, it almost seems, I mean, it seems close to impossible for a relatively small company to finance that much money, off the bat or from nothing, which is why I kind of assume that you're looking for a partner or you're looking for an outright sale. Who would that be theoretically? Like who do you think comes in and buys you? Who would this asset fit with?
Well, I mean, if you look at our presentation deck, you'll see basically, the supply and demand for phosphoric acid and what it's predicted to do, right? So it's, in a very conservative sense, we have a graph in there from CRU Group. They're saying that purified phosphoric acid needs to double in the Western world by 2045. We believe that it's going to have to go by a factor of 5 or 10, right? If electrification is truly to go onto LFP battery the way it's going to happen. So LFP battery will be constrained really by purified phosphoric acid at some point. So anybody who needs purified phosphoric acid is a potential partner, is a potential investor, whatever it may be. This is going to be very apparent by 2028. There's still a little bit of a glut on the market. It's going to be cleaning up by 2026, 2027. And at that point, there's nobody that can make purified phosphoric acid unless new projects like ours come to market. And ours is a project 100% dedicated to the battery industry, to making purified phosphoric acid for the battery industry. I mean, you just cannot open another sedimentary mine. If you open up another sedimentary phosphate mine, I mean, you have to find 80, 90% of what you're producing a market in the fertilizer world to dump all that in so that you can get to that 10 or 20% purified phosphoric acid. But for us, it's the opposite. We create 90% purified phosphoric acid, if not higher, with a very small waste stream that goes into fertilizer, which Saguenay-Lac-Saint-Jean area of Quebec has got lots of farms. That's very easy to move. So we'll just basically be creating the holy grail of what you need, which is purified phosphoric acid for this battery revolution. And LFP, if you look at it, I mean, 70% of what's being produced in China now is LFP battery. It's in 50% of Teslas. Rivian the other day just said it was moving to LFP. Energy storage systems, massive energy storage farms are all on LFP. That's going to have to come from somewhere. And we're the first ones out there. We're the first ones beating the drum. I wish the investment were coming in a lot quicker because I can build this like very quickly. But obviously, we need the market to wake up. We need investment to come by. And I can tell you, people are waking up. The calls and who we have around us looking at this is none other than the largest firms in the world. It's all out there. It's been public. It's been public since last year that we are under an NDA with everybody. So I mean, at some point, you just won't be able to do without this. Now the question is it 6 months? Is it 3 months? Is it a year? Is it 2 years? When do people really wake up? But LFP is here to stay, and it's much further ahead than NMC. NMC is going to be a great technology. Nickel, manganese, cobalt is going to remain so for high-end performances, $100,000 SUVs. But if you look at the Inflation Reduction Act, the only way that you can get that $7,500 subsidy is if your car is under $55,000. And there's only one way that you can make a car under $55,000. That's with LFP battery. So I mean, the future is big. It's bright. Whether people want to understand it or not, we're going to be there. We're going to be building it so that when it comes, we're there for it.
Isn't most of the production of LFPs in China right now, though?
Yes.
Well, wouldn't that be a problem? I mean, if the Chinese are a big part of the thesis, will Canada want the Chinese operating an open pit in Quebec?
Oh no, they don't. They don't. They do not want any interference from Chinese companies for some reason. One thing you have to look at right now, all of the LFP is made in China. Everyone's desperately trying to get the LFP to be made in Korea, Japan. They're trying in Morocco. They're trying in North America. It requires two things. It requires processes and it requires raw materials. So we're on the raw material side. We know that we're going to win on that side because the raw materials are just not there. Even in China by 2030, there will not be enough phosphate to make all this LFP battery. You're going to need new supplies of it. And the Inflation Reduction Act right now is saying such that anything that's a CAM precursor or anything that's a CAM has to be made in North America. So all this LFP is going to have to be made in North America. A lot of these larger companies like Tesla, Rivian, and the rest of them at some point here very soon, they have to source this LFP CAM and these LFP battery cells from North America. And the scramble is already starting.
Well, but I mean, you said that a potential buyer are the end producers of these LFPs, and if they're mostly Chinese, what does that mean for the pool of potential buyers for your assets?
Well, I mean, 100% of, let's say 90% of the battery industry in the world is located in China. China's got a stranglehold on all aspects of the battery, whether it be the raw materials, the technology to make them, the small polymers, the glues, whatever it is that goes into the battery. The instrumentation is all there. I mean, there's a real rush right now to bring as much of that over to the Western world as possible, because things as the Inflation Reduction Act just won't permit the importation of these vehicles from China anymore. They're working on a EU passport, a green passport, as they will, for to measure the carbon footprint of something coming into Europe. They're putting up tariffs. The tariffs were just put up the other day by the United States. Joe Biden came out, I believe, 100% tariff now on any car that's imported from China into the U.S. So there's going to have to develop a local manufacturing industry around electrification in North America. It is starting. It's going slowly. We need to go faster. But all the raw materials are really the source of that. And if you could see the way China and the rest of the world now are sort of jostling geopolitically over the raw materials, that's really important. I mean, there's already been restrictions on raw materials being sent from China to the rest of the world. They're internalizing them. They're not allowing them to be exported. So what do we do? How do we build up an industry without that? We still need to drive cars. So, you need this stuff in North America. So we're developing for this need. We think right now it's just like the boy that had his finger in the dike. It's just a trickle, but eventually it's going to be a landslide of what we need. And we're there to take advantage of that. And the market needs to wake up to this stuff.
But that eventually there matters too, right? I mean, you said it's going slowly, but the longer this takes, the tougher it is basically for you, because you just raised some capital, but again, at this market cap, how do you keep running the company in expectation of someone taking you out without doing too much dilution? Like, how do you balance that?
Yeah, I mean, those are the big problems with all of these companies right now, and the market's very grumpy towards that. I mean, we're running a really clean business here. We're putting this into PEA. Once this is in PEA, it's going to be one of if one of the most established resources possible for the source of PPA anywhere in the Western world, ready to go into feasibility study. And then we just wait. We just wait for governments to come around. We wait for strategic partners to come around. We're working on a number of other initiatives already to get into the production of iron phosphate and lithium iron phosphate on our own with other raw materials, so that when the mine comes into play, we can backwards integrate. You're absolutely right. It takes very prudent management. It takes very smart abilities to not over dilute too early. A lot of these projects run into trouble because they try to do too much, but we're running this in very astute fashion.
Just wait it's a strategy, but it also costs money and potential. You just raised, it's interesting actually, because you set out initially, I believe in mid-December, you set out to raise $2 million, but you ended up getting $8.2 million
right
by January. And I understand the concept of oversubscribed financings and all that, but this is almost like a different ball game. So talk to me about budgets. Why the 8.2? Where does that get you, and how long can you make it last?
Yeah, so the 8.2 was great. It allowed us to sort of drill up the entire frontier there of Beijing-La-Marche, the 6-kilometer strike that I was talking about. And now we're putting that into PA. We believe that's going to be a spectacular resource once it's calculated. And we still have enough cash for administrative expenses to sit tight for 2 to 3 years.
2 to 3 years. So what did you tell me? 60 grand a month is what you're targeting now in G&A?
Yeah, about $50,000 a month. When
50. Okay, so it's 600. Right. How much money are you going to have after the PA is released?
I believe we'll have about 3 million, 3 to 3.5 million
after it's released. Okay. Okay. And then so there's no need after the PA, there's basically no need to do any major work or do a capital raise to do any major work, or like, how do you look at that?
Wait, there's no need to do it unless the capital markets are favorable to us, or unless we get a source of non-dilutive financing. We've got a base shelf out there which allows us to raise capital at any time within the next 25 months. So we've done everything that a company needs to do. We got our U.S. ticker symbol that's coming online pretty soon. It opens up to a whole new group of investors. We're positioning the company the best that we can. These are not easy markets, but what I like about working in these markets is you build yourself tough. Everybody can build a business in the good markets, and then they all go to zero when the markets are tough because they can't raise money and they got these bloated overheads. We've got a very, very, very streamlined overhead. About 90% of our staff works for shares. I work for shares. I take 100% of my salary in stock. I've also got almost up to $1.5 million of my own money into the company. I continue to buy shares in the open market. we're cooking it here, and we're here, and we're committed to this company, and we're gonna make it happen. We've seen the mistakes of the over dilutions in the past. We know the markets are very cranky to all of that, and we're managing that the best that we can.
What was your, because you have almost 10 million shares, as I said, what was your average cost of capital? Because you said 1.5 million. Is that, I mean, is that literal? Like, is it 15 cents is your average cost of capital?
I've invested on just about every round of financing, every single round of financing to date, as has our management team. And sometimes, our management and our board of directors has, been 20% of capital raises, 30%, sometimes as low as 10, sometimes as high as 50. I mean, we are committed to this business, and we keep coming in, and we keep taking positions in this company. And like I said, we're all working for RSUs for stock as well. Even all of our board of directors, everything's paid in RSUs. So I think
Okay.
that's quite an interesting, way to do this. When you believe in something and you have everybody's buy-in to make it happen, and you have everybody investing, there's no other way to show commitment to the market.
What do you, I'm looking at your latest financial statement that I was quoting from at the beginning. What are you doing for marketing? Because I'm thinking of telling this story again. You're pretty much the only company that's focused on this kind of a unique story. How do you tell it to the market? What is it? Do you require a special combination? Is it conferences? What do you do?
Yeah, so when we that's a good question. When we came to market, we had a lot of the marketing firms just to get the word out. That lasted about 3 to 6 months. I thought that was important. Since then, we've basically just been going to conferences. We've been giving us special investor seminars. Every time we're invited on by a group like yourself, if it's legitimate, we're coming out. We're speaking the word. We're quite active. If you look into our news section, we have a lot of news out. We communicate very frequently with the market. We've got a massive distribution list of about 15,000 around the world. And we do what we can, in terms of this sort of outright marketing and all of this stuff. We're not big fans of that. We believe that you have to build a business, and if you build a business, then the investors will come. We're looking for a very strong group of investors. I mean, when we went public, our last raise was 35 cents. We traded well higher than that. Then obviously we hit a very bad market with lithium prices collapsing, battery metals, stocks collapsing, but we held pretty well, right? We held around right now we're a little bit lower, but all I can say is that there's a rotation of investors happening, right? We see more and more very large investors getting involved, buying the 500,000 shares, the million shares, and the small investors slowly coming out of it. So, there's a rotation that has to happen. The market is cranky right now. We have to let that be. The only thing that we can control is execution. We feel that the best marketing of this company is the execution. So, if you're following us on our newsletter, if you're following us out there on our press releases and at conferences, I'm also very active on LinkedIn. That's what we're doing right now to get our word out in what is a very economical fashion too, right? We don't want to blow the money of the company on marketing initiatives. We want it all to go into the ground. We want it to go into developing the business and developing the partnerships.
And I suppose it's a balance. It should be a balance, because if a tree falls in the woods and there's no one to hear it, then it really make a sound. Definitely true for stock prices, it seems, over the last couple of months. But you have so you mentioned that the costs that I was quoting from might not be representative of the reality, because you listed, so there's those expenses in there, but you also have a business development expense that is about 70, or was about 70 grand a month, between that February listing and November of last year. What's that business development cost going into?
Now, a lot of those costs are going towards, getting the word out, going to conferences, marketing companies, just getting the word out on the company and what we're doing. So all of that has been pretty much stopped after 6 months, and we're a known entity out there now. Like, governments know us, followers in the market know us. Whether people are buying stock or not, that's a whole different story. As you know, there's a lot of interesting dynamics in the market right now around junior companies, but like I'm happy that the company is now on the map. Our next thing that we put some good money into was getting our base shelf ready, so that when we do need to raise capital over the next couple of years, when there's an opportune time, we're ready to do it. We're ready to do it in the most efficient way. We've put money into getting our US ticker symbol going. We're not just going OTC, we're going OTCQB. That will be up and running very shortly here. We'll be FRSP. So those are I think what you could consider the new initiatives in terms of marketing, like allowing people to get exposure to the name, allowing people to be able to have access to buying the stock, getting out there onto international markets. Right, our Frankfurt listing has also been quite successful. So and we're out across the European scene, we're out across the North American scene, and all of our press releases are also translated into German. They're also translated into simplified Chinese and traditional Chinese. We're looking next to go into Korean and Japanese. So we feel these are sort of the more sort of modern kind of ways that you can market without having to rely on sort of these I don't know, I get the emails 10 a day on different marketing programs for stocks. So we don't touch any of that.
Yeah, it's true. It is. I often joke about this, but the marketing space out there is in a situation of oversupply right now. So it is challenging to find good value for the money. Good. I think I've been through most of my questions. I know you have to run here in a couple of seconds. What am I forgetting to ask you here?
Well, I guess you're forgetting to ask me is, why is the stock of great value right now?
Tell me. What do you think
Well, the reason is $17.5 million Canadian has gone into the business over the last 2 years. Our management team works day and night. We get paid in shares, and the market cap is 15 million Canadian. So there's a discount of $2.5 million to just the cash that's gone into it, right? And if you believe that LFP is going to be the future, and as you can see, there's not a lot of companies out there or none that are focused just on LFP and phosphate. And you think that this is a market that's going to grow. I mean, we're at the forefront of all of that here, ready to capture that market.
Well, sure. I mean, it seems like this is somewhat of a beginning, if you will. I'd be curious to see if LFPs get beyond the current hurdles and challenges that they have and how well they get adopted. I'll also be interested in getting updates on what you're doing with both of your projects in Quebec and if there's going to be more drilling and stuff like that, John. But I'll let you drop off now. Thank you for the overview, and again, hopefully speak soon. And as John is dropping off, I'll be moving on to the last company that I'm looking into today, which was a request from a viewer. Actually, most of these are requests from viewers. If you want to request a company or talk to me about a company, whatever it might be, go to resourcetalks.com. You'll figure it out. But I'm going to have to be at multiple places at the same time to look into this company, including Canada, the US, Northern Europe, and Australia for my conversation with Mitchell Smith, the CEO of Global Energy Metals Corp, a battery metals explorer co. The company is listed as GEMC, so that'd be GEMC on the TSXV in Canada, where an average of about 26,000 shares trade each day with a 52-week high of 9 cents and a 52-week low of 3 cents. With a market cap of about $1.5 million, a little bit more than $1.5 million, and about 46 million shares outstanding. Today, this is a 3.5-cent stock. Adding over 7 million warrants and about 4 million options leaves us with, call it 54 million fully diluted shares, with insider and strategic partners being assumed to hold over 50% of those shares. Looking at the last financial statement, which is dated March 31st, the company had less than $1 million in current assets, most of which, $800,000 to be specific, in marketable securities, small portion in cash, as well as some account receivables. No long-term debt, of course, but the current liabilities here do represent about $420,000, about half of which payable to related parties. So think directors, officers, the company, stuff like that. Now, that same statement tells me that on average over the last fiscal year, Global spent about $60,000 a month on administrative expenses. So stuff like travel, marketing, management, so on and so forth. Whereas not as much was spent on exploration, which is something I suppose Mitchell can tell us more about later on. In terms of ratio, that would mean that administrative expenses represented basically or virtually all of the spend here. So it's at about 90% in total. As always, please do understand, though, that this is only a snapshot in time at the end of last fiscal year, and head over to the company's website as well as setterplus.ca to look at the most up-to-date financial numbers by the time you're watching this so that you get the complete picture here. This is where I typically switch from the financials to telling you more about the business model of the company and the projects, but there's a lot of projects. First of all, it's going to take me a day to go through them, but also I'm kind of having a hard time understanding what's really happening, given that they have project level interest again in a lot. So 9 projects in total across 4 countries, 3 continents. There's 1 royalty and there's 5 equity positions. So Mitchell, why don't we start off with you telling me what this company is, or what you would like it to be from the perspective of maybe someone who doesn't know all that much about our sector. Like, what simple terms, like when you go to a family reunion and one of your, I don't know, older relatives asks you, what do you do? And you're like, I'm the CEO of Global Energy, which is a ...
Sure. Yeah, I'd love to go into some detail and then explain what Global is and what the vision is, what the strategy is moving forward, and how it really all came about as well. So thanks very much for the introduction. Global is really a company that's been founded to provide our shareholders exposure to the battery metals thematic. We were early adopters into the concept that battery metals are really critical for powering an electrified future. And so we took a 3-pronged approach with Global Energy, and it's evolved over time. This hasn't happened, right away, but we looked at first acquisitions and opportunities within the battery space to build up a portfolio of projects that had high potential, that had exploration deliverables that we could see, and that really warranted further exploration over time. The second part of that strategy was to explore, to look at these assets and work the projects internally, whether it be through field programs or drilling or utilizing exploration techniques that hadn't been done on those projects in the past. And the third phase and the third part of our strategy is monetization. And that's really where a lot of our projects fit today. In the evolution of the company is we've been able to move these projects through exploration to certain levels that now have attracted well-funded, jurisdictionally knowledgeable, technically experienced operators to acquire project level interests in our projects. And in doing so, we've now be able to start creating equity holdings in those peer companies that are working them. We've maintained some project level interest, and we've generated royalties off of these projects. So really being able to evolve the company from a singular asset holding company to a multi-project, multi-faceted type of approach to providing, again, our exposure to these critical commodities like copper, nickel, cobalt, lithium, and uranium, just more recently, and others.
A lot of the companies I talk to like bringing up shareholder value, and they're like, well, the strategy is to create shareholder value. And I mean, all companies talk about that all shareholders want shareholder value, but how are you going to give that to me? Like if I were to buy your stock today, how am I going to make money on it? That's what I'm asking.
Yeah, and really in terms of share appreciation, if you will, and that's really how we make money in the public markets is going from X value to the next value up. And Global's been successful, it's been successful in the past, and more recently we've had a bit of a drawback in terms of pricing and our market cap. And I think that's a reflection of overall markets, not our project specifically, but the opportunity is for growth in that share price, for discoveries to be made by peers, by the peers that we're working with, without dilution to Global's cap structure, without having to go out and constantly dilute. We're now at the point where we're attracting groups in that are funded, that have that technical ability to take those projects to the next level. And assuming the companies are successful, and we have examples of that. For instance, Kings Rose Mining, ASX listed company, we're partnered on that with the Rona project in Norway. they're spending $50 million of their money to advance that project moving forward. They announced today they just partnered with BHP on funding some of the projects there. They worked with BHP Explore on the Rona project as well. So being able to attract in new, larger partners to the table is something that I think can certainly add value for our shareholders. And of course, being able to monetize these assets moving forward and being able to divest those positions so that we can reinvest into the sector and reinvest into new projects and new opportunities that can deliver value to those shareholders.
And as far as I understand it, for you, reinvesting in the sector means getting involved in companies both at the equity as well as the project level, kind of making creative deals whatever makes sense. How do you do that? Like, what are the criteria for you to get interested into a story?
Sure, I think in terms of commodity, I mean, we are focused within the battery or the new energy metals space. So we're looking at projects that have the raw materials that are again powering that electrified future. We're looking at copper, we're looking at lithium, we're looking at nickel, we're looking at manganese, graphite, etc. We're looking at uranium because we think that there's opportunity there within the new energy and nuclear space. So looking at commodities that are part of that mandate. Looking at jurisdiction is something else that is very key to us. We think that there's opportunity and to be in top tier mining jurisdictions, jurisdictions that have rule of law that fit within the alliances that we're part of. We're a Canadian domiciled company, so we need to make sure that we have projects that Canadians can invest in and our allies can invest in and get behind. And I think that's something that's really important, especially at that partnership level when we start to evaluate and attract in new groups. Is we need to make sure that these projects are also investable to those peer groups. And the other part of it is the upside opportunity of these projects. We're looking at projects that are exploration to development stage, so that we have that uplift, and then we can then bring in a partner at a level where the larger capital requirements that can be accommodated by larger groups that are much more well funded than we are.
And I suppose being in the resource space, geology matters or should matter too.
Of course, yes.
Looking to be involved across that many different commodities, how do you manage that from the perspective of the geology? I mean, you have a team, there's a PGO on your board, sure, but you cannot be all things at the same time, right? I mean, understanding all commodities at the same time. So how do you manage that?
Yeah, a very good point, and this is really where the partnership model really succeeds. Utilizing the technical expertise of our partners is something that we believe is a fundamental attribute to this type of strategy, this type of model. Using their expertise to help advance these projects, and obviously the costs that are associated with having that type of expertise across multiple projects, across multiple continents, and multiple projects is something that at a junior exploration company of our size would be very difficult to manage. And so having that partner-based approach really helps us alleviate those drawbacks, if you will.
Another criteria, I assume, would also be for you to have available capital, which, again, looking at your balance sheet, that's currently not the case. And I understand it's a tough time in the market out there. There's a lot of blood in the streets, if you will. But that's also, as Uncle Warren likes to say, that the time to be buying, even if it's your own blood. So how do you manage that? I mean, low cash reserves and challenging financing conditions with taking advantage of the opportunities in the market.
Yeah, we've been pretty creative in terms of the way we've been able to maintain treasury and build treasury over the past. Of course, there's been financings that we've done. We've been successful in raising capital, a series of capital raises throughout the company's history. But again, we've been creative in terms of monetizing these assets and being able to retain cash from groups that are coming in, whether it be through royalty sales or through project asset sales. So we've been creative in those type of ways we've structured those deals as well.
So with the again, with the money that you have on the balance or on the bank right now, that's not enough to cover much, right? So you're gonna have to do something shortly, I assume. When do you have to do something? What do you think you're gonna do?
Yeah, I think there's discussions underway, and there's opportunities that we're considering that I think would be both valuable for existing shareholders and valuable for shareholders to come into the story on the basis of completion of some of these opportunities. We think there's that there's still real good opportunities of buying in these markets, and where we are sitting at a few $1 million valuation, given the projects that we have, given the exposure that we have to these commodities that are in short supply, and having the alliances with some of these strategic partnerships really makes for a compelling story for global and for incoming shareholders into the story. There's a number of opportunities, like I said, that we're in discussions with various groups, and we think that there could be ways to bring in capital into the company in the very short term.
Do you, as I said, insider ownership was about 50%. You've been buying some. I see that you have, 2.5 million shares. Do you know what your average cost of capital is?
From mine personally?
Yeah.
Yeah, I'm probably above the 25-cent level for myself, given the tenure I've had with the company and where I've placed. I've bought not only in the market but through every private placement that we've done, any warrant conversions, anything like that that's done, and the balance of our board and some of the officers have also contributed along the way. So I see that as a good positioning, that we see value in each of these financings that we've done, or each of these opportunities that we are able to buy in, that we certainly do so.
Why I'm asking that is because that's right. I wouldn't have imagined that you would be in the money right now, given again recent stock market moves. But so I'm thinking, like, do you keep averaging down? Because you've been nibbling away at the stock. But I mean, when you do deals, or when you will be doing deals in the future, potentially, do you typically co-invest with the company, as in buy shares personally on each one of those deals?
Yes.
Okay. That's like, is that like an insider rule that you have, or does it just typically happen so?
No, it typically happens. I think that I want to be able to say that I put money where my mouth is, and where we think what we're doing, and I believe in the company. I believe in the opportunities, and so certainly want to participate in each of those opportunities as they come about.
Right. Okay. As I mentioned at the beginning, there's about $420,000 was in current liabilities. A big chunk of that is to related parties. I assume part of that would be you, sort of, for management services, or like, what does that look like?
Yeah, exactly. So incurred management fees, etc., that we haven't taken. We'd rather put the money into keep the money within the company to maintain, to ensure that the viability of it and keep things running smoothly. and maybe I can address something that you mentioned as well, that that accounts for about 90%, if you will, of that the available funds that were spent, and 10% being on exploration. And really the reason for that is that again, even though there's been several $1 million spent on exploration this year on our projects, we haven't personally, or we haven't as a company had to incur those costs, because they're being part of that negotiation with the companies that we've attracted in on the assets. They're putting that spend forward, and they're committing those funds. They're ensuring that the projects are kept in good standing, and that the exploration budgets are healthy. That's something that we've been, with each of the deals that we've done, there's been very strict guidance on what's being spent on the ground. It's very important for us to see those projects advance and move forward, and that's why we've structured them that way.
Right. Yep, you're right. That's kind of the explanation that I was looking for there at the beginning. Let's maybe talk about what you are going to be spending money on this year, though, because you're going to Idaho in the summer, I believe. You've got DGC actually came up with a new geological model for the property in Idaho. Can you simply, not a geologist, but I'd like to. I do care about the rocks, but and I know you're not a geologist too, so I can probably appreciate that. But can you walk me through what's all that going to look like, and how is this new geological thesis different than what has previously been done on this property?
Yeah, so previously, so we have a 50%. This is the Monument Peak copper silver gold project in just outside of Salmon in Idaho, in the Lemhi County. Very prospective part of Idaho, and very pro mining. So that's again part of the reason why we were there. We're partnered with DeRouge Geological, 50-50 on the project, and Jody and his team, Jody DeRouge and his team are been serially successful in identifying projects, and we're really pleased to be working with them, and we see some real opportunity with the Monument Peak project. So over the course of the past year or so, we've had some field work that's been conducted on the project, some surveys that have been done, and based on that and a compilation of a significant amount of historical data, we did a reinterpretation of the project. Originally, it was seen as a pretty standard VMS deposit, but what Jody and his team have kind of identified is that it's really part of this Montana belt of copper mineralization that kind of extends down into the top of Idaho, and right directly in trend with Monument Peak, and fits with some of these more historical data. So there's more work that needs to be done. There's some a summer program that they've identified, and we've agreed that this should be a priority, really to confirm this new hypothesis, if you will, this new idea on the structure and mineralization of the project. And if that's the case, we think that there's potential for a very significant project to be had at site, and so again, which would warrant further exploration, further drilling, further programs to be done, and again, potentially it leads into attracting in a larger partner. There's a lot of attention in Idaho right now. There's a number of groups within that similar area that have identified some strong copper grounds, attracted in larger companies, and so we want to pursue this a little bit further and see what we can do. jointly with the DeRouge team.
I do want to talk about potentially attracting a larger partner and who that might be later on. What I'm thinking about is that these lands have been looked at historically, right? All the way since the early 1900s, and then as recently as the late 1980s, there was a paper written on them, I believe. What do you think if people looking at them missed, and how did they miss it?
Yeah, I don't necessarily think that there was misses made, because there were some very high grades that were sampled and pulled out of these projects, and part of it really is on fragmented ownership, and we've been very lucky with another set of projects that we have in Nevada, the Lovelock and Treasure Box projects. That is that same very case, is that over years, other groups have held them. They haven't been able to give up land because they did think it was prospective. They did think there was opportunity there, and so that those packages weren't being able to be assembled to scale. And so that's another another attribute that we were talking about earlier, is scalability of these projects. We need to be able to show and demonstrate that these projects can have size eventually, and can be built out. And that really demands being able to put together these sizable projects that can be explored to the full potential. The other part of that is grades were something that 100 years ago, or 60, 50 years ago, the grades didn't have to be as high. It was all about that size. So now, we're looking at some of these smaller projects, if you will, but that have good and decent grades at today's levels, and can be economic. So grades important, sizes important, and being able to be flexible and being able to amass these projects is key to this. And DeRouge and his team, they were able to do that with Monument Peak. We've been able to benefit from that by being partners with them, and again, we've been able to show this with other assets that we have as well.
And you also mentioned in that news release, if I'm not mistaken, that this project shares similarities, if you will, with the Western Montana Copper Belt. Interesting comparison to begin with. There's a couple of notable deposits, historic deposits to look at over there. Where's that deposit coming? That comparison coming from, and also will having that comparison help you come up with drill targets eventually?
Yeah, and that's the thing that we're going to really work on with DeRouge. They put together this revision to the concept behind where that mineralization is, and using some of those comparables, using some of the data that we found at site, and we're able to dig up historically, has prepared us for having to validate this that thesis. And so that's where the summer program really is going to come into play. And I think we look forward to being able to get on the ground with our partners, and again, a very, very successful, very skilled geological team with DeRouge, and looking forward to seeing what we can do with them on that.
The news release also said that the mineralized width at Momentum Peak range is sort of from 3 to 6 meters, but can reach up to 50 meters in some areas. Why the width variability there? I don't think it's the same width variability at those comparisons that you give. What do you think? What's the plan for dealing with that during exploration, and could that form a challenge further on?
Yeah, and again, I'm not on the technical side of this, but what I can say is that I think there's structural trends that can be that we've identified as being prospective already, and there is some variability not only in terms of the widths, but also in the depths of these. Something that you addressed earlier about being missing. I think when there was some previous drilling done on the projects, and because of the way that these zones have formed, there were some misses, and we want to be able to go out and really test that opportunity and see if there's in fact ability to intersect some of these mineralized zones.
As far as I understand, sedimentary copper deposits can also be challenging in terms of structural controls or figuring out the structural controls during target. But you just mentioned something about the structural controls. What do you mean?
Just in terms of the previous work that was done, there was some faulting that had occurred, and I guess they weren't able to intersect some of the zones of mineralization. I think Deruge and they've come up with some ideas as to why that is, and they want to be able to test that, and that was really part of that that new planned approach to refine the exploration targets and look at some enhanced visibility within what those structural controls are, firstly, what that mineralization means, and if there actually is that continuation from within that Montana belt.
So this year is going to be focused on figuring that out specifically.
Yes, I think that is our plan for Idaho. Yes, that's the plan for Idaho, is to really understand, do some surface mapping, being able to continue on some of the field and work and get additional rock samples in place, with the idea that we have a targeted drill program ready for next steps.
Right. Okay. Before I stop being annoying about the geology here, where to go back to that comparison on to the Western Montana Copper Belt, what kind of grades are typically found on that belt? Is sort of sub 1%, right? 0.6, 0.7%. What would I mean? Is that what you would consider a success eventually on this project, or what kind of grades are you thinking, hoping for?
Yeah, I think if we can find those 1% mineralization, that would be a win for us, especially given where the grades of copper projects nowadays are, especially in jurisdictions like Idaho. But we've had some very successful sampling done where the rock samples have been in excess of that, and so I think there's these opportunities where more work needs to be done to validate and to really see what's underground.
Right. Okay. Well, it's going to be interesting to see what happens, because you're not drilling there yet. You mentioned this year. I mean, you need to do more work to get there. When do you think actually that you'll be drilling? Like, well, what is it? Is that a 2025 thing, or is it maybe even later down the road?
No, I think we're flexible in terms of how this evolves, and I think we're of the mind that let's take steps here and be able to validate and enhance our understanding before we start promising drill programs and etc. And the only way to really to do that is to be on the ground and to move these projects forward. But again, the idea is to validate to the next level so that we can put these targets in place and drill the project. And again, whether that's us doing it or whether it's a strategic partner moving forward with that, we just want to see these projects move forward and maintain exposure to success at site.
Okay. Is this on BLM ground in the U.S.?
Yes. Yeah.
Okay, so you would have to permit with them. How's that looking? I don't assume. I think Idaho is a red state. I don't assume that's going to change, irrespective of the elections. But just kind of trying to look forward as to if you want to get someone involved, well, then the permitting regime should be straightforward. Do you have any insights on the permitting regime?
Yeah, permitting. It's been knock on wood. I'm going to say it's been very good for us. Again, I think because some of the relationships that Deruge has in state and being able to work there and having multiple programs that they've done, there's a good relationships, but we're looking anywhere from 4 to 6 weeks on getting permits submitted, reviewed, and approved. And again, we've had no trouble to date. Hopefully, we continue to see that same. But it's the jurisdiction that the county that we're in is again very pro mining, and the industry, mining industry is very big in the region. So there's no reason why those permits shouldn't go through.
Okay, but so for the work that you want to do this year, though, that's all. I mean, that's all fine. You're permitted. You can just go ahead and do it.
Correct. Yeah, everything to up to date. Everything is up to date on being able to get on site when we are able to do so.
Yeah. Well, almost everything, I suppose. Again, going back to capital, to how much money is going to be going into that project this year?
I think the estimate for the work program is sub $500,000. Again, that is split between DeRouge and us, given we're 50-50 on the partnership. And there's creative ways that we can make that happen. And I think the DeRouge team really wants to see this explored further. So we'll see how that gets how that moves forward. But all efforts are being made to ensure that we have a successful summer at site.
Because you mentioned a couple of times a potential partner. Who do you think that's going to be? Like, who is really a reasonably expected potential partner?
Yeah, there's a number out there. I mean, there's groups that are certainly interested in copper. There's groups that are interested in copper in the United States. No names, but and there's also companies like we've done in the past here is more peer-based groups that are looking for company-making projects that have the capital, that have the technical expertise, that want to be able to take on a project like Monument or some of the other assets that we have and move forward with them. And we're open to working with those type of groups as well, whether it's another junior or whether it's a BHP or a Rio Tinto, right? I mean, that's we're looking at all different levels in terms of what those strategic partnerships can be.
Right. I'm also looking at the SEDI filings here. Mr. Gleason is someone who's kept putting money in the company as well. He's involved with Electric Royalties, as you know, a company that I've also interviewed before. Is there a potential partnership there through that link? Are you guys talking? Talk to me about that.
Yeah, for sure. I mean, Brendan and I, Brendan Urich, the CEO of Electric Royalties, and I talk quite regularly. Stephen Gleason and I obviously talk regularly. As you know, we've done multiple deals with Brendan already and his team with the sale of royalties at the Rona project in Norway, our Palladium project in Australia, as well as the Cobalt Ridge and Mount Dorothy projects in Queensland. So we've definitely done things with Brendan and his team before, and again we keep that dialogue very, very open.
Okay. Well, I don't assume there's anything specific you can talk to me about that there, but yeah. And especially we spent a good portion of our time here so far talking about the potential for copper in Idaho. But is that also what you'll be spending most of your time on this year? I mean, what else is happening on a project level for you?
Yeah, I think again internally, I think the U.S. projects that we hold, whether in Idaho, are certainly on the agenda. Lovelock and Treasure Box, which are high grade or historically high grade copper, nickel, cobalt projects just outside of Reno in Nevada, are also very compelling and interesting to us. They certainly warrant further exploration. So there's opportunity at site there. We've put together programs based on field work that we've done, AI work that we did with Gold Spot Discoveries. They've changed their name, Earth Labs, blanking, sorry. Some work with American Battery Technology Company on looking at processing of the nickel and the copper and the cobalt out of it. So we're looking at ways to advance those projects as well. And again, I think that they certainly warrant further exploration. And then other projects that we have exposure to. We did a deal with Fulcrum Metals where we we were going to acquire a strategic interest and a royalty on a portfolio of uranium assets in Saskatchewan in the Athabasca Basin. We've since redid that deal as another group. We were able to bring in Terra Volcanica, which is a CSE listed company. They have some projects in the Balkans, but they wanted further exposure to Canadian assets like the uranium space. So they're acquiring 100% of those Saskatchewan projects. We are going to maintain a 0.5% royalty on those properties, as well as get some share equity into Terra as well. So we've got some exposure to uranium in that sense. Again, the Rona project, Kings Rose Mining, they're going to be very active in Norway. They've just secured, as I mentioned, that partnership with BHP to explore some of their other projects, to the $20 million US being spent on their other projects. So that will really allow them to focus on Rona internally. And then our Australian assets, Millennium being sole funded by Metal Bank, an ASX listed company. They're focused on bringing that to a feasibility level. So further exploration is being done at site there. So a lot of things happening, not necessarily internal again, but we certainly share from the benefits from our partner-based approach.
How much money do you think you're going to have to spend, or do you want to spend on Lovelock and Treasure Box?
We've targeted around $1.5 million that could be spent on Treasure Box and Lovelock, and both of those are for further drilling and some additional survey and field work that would need to be done there. And we're in some discussions with groups, operators that could potentially take that on. So stay tuned for that.
Oh, okay. And then G&A, I mentioned about 60K is what it was last year. A month? What are you targeting this year?
Yeah, I think it'll be very, very close to the same. I mean, I think our burn rate is pretty low. We've been able to reduce some costs and again minimize as much as possible to ensure that dollars are being spent on and being spent in the right direction, and make sure that the company is able to benefit from all these partner and exploration programs underway.
Right. But at the same time, so $1.5 million could be spent on Lovelock, you said, so not necessarily have to spend it this year. You do want to spend
no.
Yeah.
And I guess that's another important aspect is we don't have spend requirements on any of these projects that we have. So it's at our election as to when those dollars go into the ground. I know there's sometimes operational mandates that require X dollars being spent within certain timeframes, and unfortunately, we don't have those in any of the projects that we own.
Right. Okay. But the 500,000 you told me in Idaho, you don't have to spend it, but you want to spend it. What do you think is the likelihood of actually doing that exploration program?
I think there's a high degree that we will be exploring multiple projects this year.
Okay. Yeah. Well, then, however way I want to calculate it, almost all the time I'm coming up with more money that you have to or you want to spend this year than the entirety of your market cap right now. So yeah, I suppose I mean it goes back to the same question that I asked you before, but as to how do you raise this capital? And what kind of deals are we going to see? But then you said you have and I wrote it down, you have yeah, I mean, you're planning a news release, what, soon? When do you think you're going to have a more definitive answer to the money problem here?
I would say we would have more definite ideas to being able to build out that treasury in the next several weeks.
Several weeks. Okay.
Yeah, I think we're in a position to start making. We realize there's a necessity, obviously, like as you're saying, there's a necessity to be able to go out and raise money. If we're going to move these projects forward, if we're going to move the company forward, we will need to go out and raise capital, whether that's through equity or through further project monetization. I think there's opportunity within the company to make that happen.
And I also, what I'm wondering about or where I'm coming from with all this, because given it's a more unique company, if you will, I assume that also means that you can't just rely on sort of traditional marketing, if you will, where it's only like conferences and roadshows or something like that. So, I mean, is that the case? And what else are you doing to spread the story in again, a cost-effective way, given the situation?
Yeah, I think having being part of this community and the mining community, which again is relatively small, and being somebody who has been a voice and an advocate for the battery metal sector for a long time, we're able to communicate that message to that. There is opportunity within global energy. We have that exposure to various assets, to the commodities that are in high demand right now. So we are doing that, and whether it's talking to advisors or talking to the retail audience through social media or through doing interviews like this, or some of the roadshows that non-marketing roadshows that we've done and will continue to do. I think that's important. It's important to tell the stories, to be able to get in front of as many people as we can, because it really only takes one for the story to resonate with, to really make things move. We have a very strong shareholder base. We have a very committed group internally, and obviously have support from people like Mr. Gleason and a few others that are significant shareholders within the company and continue to see the upside, especially when we're trading at like you said, $1.5 million, $2 million market cap.
How many people you say have a strong shareholder registry? Do you have an idea of how many people are actually on the registry?
Yeah, I mean, there's a lot of people on the registry. We're talking, a couple hundred people on the registry. But when you're looking at significant holders, there's a handful of them.
Right. So, I mean, let's say I gave you 5 phone calls. How much of the stock do you think you're going to be able to trace?
With 5 phone calls, we can easily do over 50% of those.
Right. Outside of management, because management is
strong,
50% already.
Yeah, there's a strong shareholder base internally. I mean, with outside of management, there's still another 20%, 25% of the stock that we have really good eyes on.
Good. Okay. Good. Well, Mitchell, yeah, you're giving me a better perspective. As a viewer reached out and said, like, hey, talk to these guys, something's happening. So you're giving me a better perspective of what is happening. It seems like there's going to be stuff to talk about this year. So I think I'll let you go now. I've been through most of my questions. What am I forgetting to ask you, though? What did you come here hoping to talk about that I'm not bringing up?
I mean, I think we've talked about a lot for sure, and hopefully I've been able to answer most of the questions to expectation. Yeah, I think we're always open for conversations like this, and whether it's direct with me or with the team, we're open to holding these type of calls and speaking directly with our shareholders. So if there are questions, please always reach us, and we're happy to answer them to the best of our ability.